Perfect. So if you're looking at the Jan 26 exam and you're looking to revise DT, and whichever month this could be as soon as April or May, June, July, August, September, October, the dreaded months of December, where exam is next month. Don't worry, guys. These videos will help you revise. We're going to be recording a video for every chapter and we're going to keep it crisp. We're going to limit it to about 5 minutes. Read this chapter with your handwritten notes. Whether you've been a part of my class for Jan 26 or even before or you're repeating it, these videos will be helpful to revise. All of you guys in class have to participate while we revise this chapter. Guys, what is the first chapter on DT that we are looking to revise? It's called Introduction, or it is also called Basic Concepts. Yes, so this is not a very important chapter, but since you're revising and you want to start with the base, this is a good video to revise from. Guys, introduction of basic concepts of income tax. DT is direct tax, which is also called which tax, guys? Income tax. And on the opposite is GST, which is goods and services tax, which is an indirect tax. So this is direct tax, that is indirect. This is progressive because only when you earn income will you pay taxes. This is progressive, that is regressive because everyone lands up paying what, guys? GST. And how much does this contribute to the government? 50%. How much does that contribute to the government? 50%, more or less, guys, and 50-50 marks also in the exam. All right. Next, guys, we come to the Income Tax Act. Which year is the Income Tax Act? 1961. Income Tax Rules, 1962. And guys, does it get amended every year? Yes, it's called the Finance Act or the Budget. Budget is presented to the parliament, then it gets accepted by the members of parliament. They clap for it and they bang the tables, etc. And it gets passed, and it's called the Finance Act. Guys, if your exam is in Jan 26 and the Finance Act applicable to your exam is which one? 2024. If your friend tells you that it's Finance Act 2025, recent budget, guys, block that friend. We don't want such confusion in life, guys. It's the Finance Act 2024, which is applicable to your exam. And in all these videos, we'll cover all the latest amendments as well. All right, now we begin, guys. Different persons under the Income Tax Act, guys. The person can be an individual. Guys, individual pays its own tax. Who can be the next person, guys? HUF. Next, partnership firm, also called LLP. Technically, guys, are they different? Yes. But from a tax perspective, same. Next is company. Can be a domestic company or a foreign company. Domestic companies are basically in India. Foreign companies are abroad. They can also get registered in India. There is AOP. BOI. AOP is Association of Person. Body of Individual is BOI. Guys, here anyone can be. You're only individual. This is intentional. That is not intentional. And then there is AJP, Artificial Juridical Person. But in the exam, which one? Only and only. That's the secret sauce, guys. This is what the exam looks at. Next, guys, there are different steps to pay tax. The first step is called legal status. In this classroom, all of us legal status is individual. Next status is residential status. You can be a resident or a non-resident. We'll check it every year, guys. Next is the scope of income. That means those income which are taxable in India. And if you're taxable in India, you can be taxed under which of the five heads of income, guys? First, salary. Second, house property. Third, business and profession. Fourth, capital gain. Fifth, IFOS. Is there a sixth head of income? No. And in each head of income, there is give and take, guys. What we offer to the government is income, and what they offer to us is deduction. Then it goes in a funnel, guys. It goes to clubbing. If your income has passed to someone else, guys, will it come back to you? Yes. Then, guys, losses can be set off. If you can't set it off, it can also be carried forward. And ultimately, the number is gross, which right now is a very useless number because we don't pay tax on GTI. From GTI, we have deduction under chapter. How will you remember 6A, guys? There are five heads of income. This is the sixth one. And from that, guys, the number which we get is the income. Is that the hero number? Yes, because the tax is calculated on the total income. Tax is not calculated on your PGBP or IFOS. It's always calculated on the total income. And guys, this tax is paid through different mechanisms. One of them could be advance tax. One of them could be TDS, TCS. One of them could be self-assessment tax. Are they different taxes? They are the same income tax, but different ways of paying what, guys? Income tax. And all this story of your year has told to the government by filing a return of income. This is a year where you earn the incomes for your exam perspective, guys. It's called the previous year 24-25. Starts on 1st April 2024, ends on 31st March 2025. And guys, all that happened in previous year, the government assesses you in which year, guys? Assessment year. Are they two different years technically? Yes. But guys, they are like your name and surname. Do they mean the same thing? Yes. Next, guys, anyone in India who pays tax is called what, guys? More or less, guys, this is your first chapter. While farmers in India are very happy because they don't land up paying tax, we might not be very happy revising a chapter after many months where we don't know where to start. If you're looking to start agriculture income and exempt income as a chapter to revise, this is the video that you should be watching. Yes, let's do a small, very quick, and very comprehensive recap. If you in life become a farmer, how will you be taxed? Let's see that. Guys, agriculture income is the first thing the government exempted, and that's why it's the first exemption under section 10(1). The government said that if you grow and you sell any agricultural produce means all your fruits, vegetables, anything that you grow and sell, but you can't buy and sell. You have to grow and sell. Is that exempt? Yes. If you can't do it, can I rent it out to someone? Even the rental income will be exempt under which section? 10(1). I can grow seedlings, saplings, flowers, creepers, guys, even bamboo if I grow and sell, guys, all of that will be completely exempt. And not just that, next to the farm, guys, some people have a farm building. Can I rent it out for agricultural purposes? Even that is considered as agriculture income. So everyone, big exemption for agriculture. That's why in India, a lot of farmers make a lot of money, some of them, and they don't end up paying tax. Guys, we're talking about RAL, rural agricultural land. In rural areas, not all the land, only agriculture land. Guys, that even if you sell, it is not taxable. It's not exempt. The word is different, not taxable, but they mean the same thing. Next, guys, if by chance an agriculture land is an urban area, what will we call that land? UAL, urban agricultural land. It differs from RAL in two ways. SB. What is the short form? Shortcut SB. S is sale. Now it's the land is in which area? Urban. Is it valuable? When you sell it, who's standing with you? Now they say it is valuable, I want to tax it. And then farm building, guys, now F farm building, B is for building. Whatever income, even if it's for agriculture, the government says, listen, now it's in which area? So we can't exempt it, that will be taxable. The two difference. Well, what is urban and what is rural, guys, is defined by an area and a kilometers. So if it's a very big city like Bangalore, Mumbai, Delhi, then from the municipal limits up to 8 kilometers, all of that is what? Urban. Outside that, rural. Next, if a smaller city, then 6 kilometers, smaller city, 2 kilometers, and smallest town, 0. Next, guys, there are some incomes which have a mix of both agriculture also and business also. Those incomes are called farm to zero. Guys, how many cups of tea will you not have in a tea? 8. There's a rule called Rule 8. And Rule 8 says that if you grow tea leaves and you make tea powder and you sell, some part of it will be PGBP. How much part? 40. So obviously the balance is what? Owns. But not of the sales of the profit. Same for coffee also. Coffee will be 40 and 60. But coffee, if only grown and only cured, then 25. If grown, cured, roasted, grounded, flavored, everything, then 40. For rubber, this percentage changes to 35 and 65. And guys, if I have a grapes business and I use those grapes, grow those grapes, and take it to my wine making factory, then that transfer should happen at what value? Market value. If the market value is 100, can I transfer it at 100? Yes. 98 also is okay, but I can't transfer at 105. This is as per rule number 7. Guys, in India, while farmers are not taxed, and you and me as CS, we will be taxed, there is a guy in the middle who's earning both agriculture income also and taxable income also. The government says, listen, you will be scammed because there is a scam of partial integration. Is it scam or scheme? Scheme. Scheme of partial integration. In this scheme, there are 3 steps. First step is from. We take his taxable income also and agriculture income. We calculate tax, basic tax also, surcharge also, HEC also, everything. We get that number. Then step number 2 is transfer. We take the agriculture income, which he does not want to pay tax on, and basic exemption limit, which is either 2.5 or 3 or 5, depending on his age. And on that, again, we calculate tax, basic tax, surcharge, and HEC. And step number 3 is the difference. This is what he'll have to pay because of SOPI. Now, SOPI does not apply to everyone in India, guys. Only for people who earn both incomes, agriculture more than 5 and taxable income more than basic exemption limit. And guys, it applies only to individuals and yes, of course, companies, partnership firms, for them it does not apply. Yes, this is agriculture income. While this is the biggest set of exempt income, guys, there are some other exempt income like 10(2) says if your HUF has already paid the tax, then on the share of profit, will you again pay tax? No, it is exempt under section 10(2). Partnership firm has paid the tax, share of profit of the partners, 10(2)A exempt. Interest in your bank account, is it taxable? Yes. But if you have an NRE account, non-resident external account, can only be opened by non-residents and they put which currency in it? Foreign. And hence the interest is exempt under section 10 over. So a lot of people in India work abroad in embassies. They work for government of India. Same way, French government also sent 6 people to India, guys. Their salary, yes, their salary is being paid by whom? France. But we have an arrangement with them that we tax, they tax, yeah, and hence their 6 people will be taxed by France. So we have to exempt them under section 10. Since our person in France, guys, their salary we tax our people. We'll see in the next chapter. But the allowances are exempt under which section? 10. Next 10 we see if there's a big calamity like a flood and you get some money from the government, NGO funds, etc., then that is completely exempt under section 10 you see. You can refer the sections from here, guys, or you've also written about them. So this is a quick book where everything is there. So all these different sections are here. Next, guys, if you've taken a life insurance policy and you paid premiums and you got the money on account of death of some person, then it is completely exempt. But guys, if the premiums are low, how low? 10%. If your policy is for 10 lakh, what is 10%? 1 lakh. If all the premiums are low, again it is exempt, but any one premium also high, then the entire amount when you get it back, not when you pay the premium, when you get it back, will be taxable. Excellent, guys. So this is 10% now, but if the policy was taken before 2012, and for disabled person, 20 has become 15 in 2013. But remember, 10% is the most important one. 1012A, 1012B is in NPS. We'll see it in a chapter called salaries. Next, 1015 in the post office. Can you open a savings account? When you earn the interest, it is exempt up to 3,000. And if it's a joint account, then 7. Nice. Putting money in Sukanya Samriddhi account will help a girl child. When you put the money, we're not talking about that. But when you withdraw the money, 11 lakhs in the account, is it exempt? Under section 10, 11, you guys are smart. I am hoping you get some scholarships in life. If you get scholarships, they will be exempt under 10, 16. MPs, MLA is not our favorite people, but very important people. The allowances are 10, 17. If you get awards and you get some money in awards, 10, 17. If you're a gallantry award winner, yeah, no, and you're getting pension. Pension is usually taxable PT. Pension is taxable. But these gallantry award winners, guys, their pension is exempt. Guys, 10, 19. At the age of 19, shortcuts, guys. At the age of 19, people lose their life at the border. If you lost your life as a soldier or you become permanently disabled, the pension will be completely exempt. In India, we have many states. Of course, our favorite state is, oh no, guys, Karnataka, of course. But the second favorite state is which, guys? Sikkim. And if you happen to be in Sikkim and you earn 2 types of income, all income within Sikkim and interest and dividend from across India, it is exempt under section 1026A capital. Next, guys. Of course, you had agreed that the perfect age to get married is 26, and the perfect age to have a kid is 32. And when you have a kid, guys, are there many advantages? Yes. One very big advantage is that when the income is clubbed in your hands of the minor child, you will get an exemption of 1,500 per child whose income is clubbed. What if you have 2 children? Congratulations, 3 children. Why then? Yeah. No. Guys, any number of children as long as the amount is clubbed. Yes, everyone. Okay. 1034 was for dividend, but that has been removed now. Now is dividend taxable? Yes. 1037, guys. Can the government compulsory acquire your urban agricultural land? If you sell, it's taxable, but if the government takes over, they will exempt it, provided you use it for agricultural purpose in the last 2 years, and provided you're an individual or a AGI. And guys, if you happen to do a reverse mortgage scheme, that means what? You take your land, house papers, give it to the bank, and the bank on that valuation, they give you every month some money. Is that money yours? Yes. But is that income? No. You need to pay it back. How the bank recovers the money does not matter. But guys, taxation perspective, this is exempt under section 1042. While all this is exemption, there's a small deduction which has been included here, guys. If you go to an SEZ, and if you export from there, guys, will you get some benefits? Yes. They will give you benefit for 15 years for 5 years. Next 5 years, and next 5 years, 50% subject to a conversion. That's why, guys, this SEZ is for us an awesome area, and the deduction is under section 10A. These 15 years, you cannot start today. Then why do we discuss this? Guys, the last year to start this was 2021 financial year, but we still discuss it because someone who started that year is this 15 years going on? Yes. Guys, we need to calculate a number called SEZ PE. The profit, P is for profit, and the export percentage of which unit SOZ. And we need to calculate the deduction. In the first 5 years, you take the full thing. In the next 5 years, you take half. And the last 5 years, you will get the reduction, but with a condition. If you want 7 lakh deduction, put that 7 lakh into a separate account called reinvestment reserve account and use it to buy new plant and machinery. What if you don't use it? Add it back. What if you misuse it? Again, they will add it back. And you have 3 years since when you put the money, you have 3 years to use that money. And remember, guys, whenever you are exporting, example from the SC that you're exporting laptops, you have to get the foreign currency back by 6 months from the end of the year. And if there is any freight, insurance, and telecom, which you've included in that amount of sales, guys, you have to remove it from both export turnover and guys. Once you visit and once you watch this video, go to your handwritten notes. Again, read all the notes well. Yes, guys, in the scheme of revision videos, we've already seen for Jan 26 exam, the first video was on which chapter? Introduction, and now we move to the second chapter, which is called income from house stock. If you're wondering where to revise, what to start with, watch this video along with your handwritten notes, and that will be a good part to revise and start revision. I want everyone to stop packing and start participating. Yes. Guys, income from house property, this is one of the heads of income, which starts at which section? 22 and goes on till which section, guys? 27. And guys, income from house property, this room opens up only when you become an owner of which property, guys? House. Guys, house property means a residence also, means an office also, a shop also, a godown also. But guys, if you rent a plain piece of land, example, you rent it out for weddings, etc., this will be taxed under which head, guys? IFOS. Alright, guys. The house that you own, can you rent it out? It will be called as what property, guys? Let out property. In let out property, guys, please tell me, are you offering income to the government? Yes. For example, your house property is rented out for 1 lakh rupees per month into 12 months. What is your actual 12 lakh? The government will start with this. They always compare your actual rent with which rent, guys? Expected rent, and they take whichever is. What do you mean by expected rent? How does the government figure expected? They take municipal value or fair rent, whichever is higher. Higher. Because higher the income, higher the tax, but this subject to a limit of which rent, guys, standard rent. If this is 8 lakh, this is 9 lakh, which one will you take, guys? 9 lakh, subject to the limit of, let's say, 10. Which one will you take, guys? Right? And guys, what if this was 8 lakh 75,000? Then which one will you take, guys? 8 lakh 75,000. Alright, that's your expected rent. Is actual rent, can I minus unrealized rent? But what do you mean by unrealized rent, guys? Someone who's not paying you rent, guys, you can minus it only if you fulfill how many conditions? Four. You will repeat all the four conditions right now, guys. Legally, vacate, power, building. You should take what action? You should ask him to vacate. You should ask him that no other building should be given to him and that agreement should be bona fide, means in good faith. And can I minus unrealized rent? Yes. Next, guys, I have some vacancy loss. What do you mean by vacancy? When the house is completely but when you ring the bell, who opens the door? No one. Guys, can I manage vacancy loss? Yes, only one condition. What is that condition? Your AR should be more than your ER. And once you minus vacancy loss, guys, after that you have to ignore what, guys? Then you have to take whichever is. Yeah. And then ultimately, guys, we get a number which we call cross annual value. Example that is, let's say, 9. Are you offering income to the government? Yes, the government has a rule of give and take. If you give income to the government for tax, they give you deductions. Then house property, how many total deductions, guys? Only three. Can I take four? No, can I take 2.9? No, only three deductions. The first one, principal tax, but only if you. What if I pay on the 4th of April? Then you will get next year. What if I pay on 31st March? Yes. So, guys, whatever is paid, will you get a deduction? Yes. Example, 1 lakh, will I get this deduction? Yeah. What if it's paid by the tenant? Then you won't get a deduction. Then this is how much, guys, now? 8 lakh. And what do you call this number, guys? NAV, net real value. In the exam and homework, this is before the exam, you're watching this video. In the exam, only and only use full forms. Next, guys, how much is the standard deduction? 30% for every expenditure that you do or you don't do, you'll get standard deduction. Standard means everyone gets it, guys, under section 24A, guys, example, 2,40,000 is a standard here. Guys, can I take something more after this? What if the exam says repairs, insurance, etc.? No, you will only get maximum. And then after that, guys, can this house property be on a loan? Guys, loan can be taken from anyone, bank, relative, rich neighbor, anyone, guys. And whatever interest you are paying or payable, guys, will you get a deduction for that also? Example, 3 lakh 60 total become how much, guys? 6 lakh. So your income from house property is how much, guys? This is your LOP. Next, guys, can you not rent it out? Can you stay in it yourself? That kind of property is called what, guys? SOP, self-occupied property. What is the rent that you get when you occupy yourself? Zero. All the numbers here are what, guys? Zero. Only thing is deduction you will get for is they will give you interest deduction, but they can't give you unlimited interest deduction. They will either maximize it to 2 lakh or 30,000, depending on some condition, guys. 35, 5 accounts for 99. In that main is what, guys? Accounts. It should be for what purpose? If the loan you've taken for acquisition or construction, then what is the limit? 2 lakh. Otherwise, guys, what will be the limit? 20,000. So only for SOP will you check this limit? Yes. But guys, can I buy multiple SOPs? Yes, it's your money, buy 10 SOPs, but the benefit of this deduction will be given only for how many, guys? Two. And that too, if it's 2 lakh here, 2 lakh here, will I get 4 lakh? Never. Maximum per person you will get is only 2 lakh. If it's 2 lakh here and 30,000 here, then congratulations, you will still get how much, guys? 2 lakh. But what if it's 30,000 here and 30,000 here? Then sorry, you will only get how much, guys? 30,000 is maximum. Guys, remember all this limit is only for which property? Guys, next. Can the house sometimes be LOP? And for some months be what, guys? SOP. Guys, then how will I calculate that? LOP, that means, guys, will I get municipal tax deduction? Yes. Will I get standard deduction? And how much deduction on interest? Full. Excellent, guys. And for rich people, if you have more than how many SOP? So the other SOPs will be called as. So that means, guys, if I have one house in Mumbai, one in Bangalore, one in Goa, and I tell the government all three of them are what? SOPs, the government will not believe me. They will ask me, any two will be considered as SOP. You can choose that, guys, and the third house will be considered as what, guys? In let out property. The government will assume it, and this is the same calculation as what, guys? Okay, so how many deductions here also? Three. And guys, now for builders like Prestige, Shobha, Loda, DLF, etc. Guys, once you build your house, the year of receiving what, guys? OC or the year of receiving CC. Guys, after that, how many years will they wait? 2 years, guys. 2 years they will wait for you to sell the house. But if you don't sell the house, then in the next year they will assume it to be what? Land. Guys, that all these five are under section 23. Section 24A, standard deduction. Section 24B. Guys, what about interest on interest? No. What about penalty? No. What about fresh loan? That's okay. And guys, interest is how many parts? One, guys, current year interest also and PCB. What do you mean by current year interest? If my house has been made on 1st July 2024, then which is my current year? Full year, not date wise. You have to go year wise. The entire year is my current year. Will I get full deduction? Next year also? Next to next year also? Yes. But guys, what if my house was under construction? Date or year? Then on that construction period, that interest is called which interest? Is PCP, full form pre-construction period. And will I get a deduction for that also? Yes, but not as a cake, as a pastry. How many parts, guys? Over how many years, guys? 5 years. So after that 5 years, guys, will I get PCP interest? No. But will I get current year interest? Yes. Solve some sums on that. That's a tricky part, guys. Be very strong on that. Next, guys, in section 25A, can someone pay you arrears? If they pay you arrears, guys, will that be taxable? Yes, because if there is income, there will be in the year of receipt after a standard deduction of 30%. Here, guys, at what age will you start getting married or co-ownership? 26. And when you get co-owned, guys, in that case, how will you be taxed? If the co-owned property, what is co-ownership, by the way? Two or more people co-own the property, guys. In that case, what if it's rented out? Then do the calculation normally in the last. L for LOP, L for last. Will you split, guys? Yes. And what if it's a SOP? From start, what do I mean from start? What if there are two co-owners? Both will get a deduction of 2 lakh or 30,000 each. Because the deduction is per person. And guys, last, guys, 27. If it's my house property, who should pay the tax? Guys, can I try and fool the government by passing the house to my wife? Yes. The government doesn't get fooled so easily. They say that the asset, even if you transfer the income, will come back. The dog always goes back to its. Guys, except AS, adequate consideration and separation. In these two cases, will the income come back to me? No. And guys, what if I transfer it to my minor child, guys? Still, again, will the income come back to me? Yes. Except AM. What is AM? Adequate consideration of minor and daughter. In these two cases, will not come back to me. I know married man daughter is a wrong thing, but this wrong is only. What if I transfer the house to my parents? Guys, will the income come back? So income comes back only in how many cases? Two cases. Now some additional points, guys. What if someone has sublet a property, guys? Will that income be taxed? But under which head, guys? What if a pure land is rented out? It will be taxed under. If it is rent of house property plus furniture also, then house property will go under house. Furniture rent will go under IFOs because, guys, it is not house property. And guys, what if I have a house which has been divided into two parts, SOP and LOP? If they divide the house, you divide the calculation. And which is the easier calculation always, guys? Okay, so always start with that and start building. And guys, what if I have a house property abroad, but I am a resident in India? Can that still be taxed? Yes, guys, that will be still be taxed. And what if the house is in London and I pay municipal tax in London? Will I get deduction? Because the rule is if you're offering what to the government, will offer what to you. Besides this, guys, there are some other points in section 27 deemed ownership, like cooperative society member, like impartial estate, like not registering document. But still, guys, if there is income, be taxed. Because if there is income, there will be. I'm expecting in your exam, Jan 26 to be a fine question. And if happens to be the case, draw that table well, guys, and write the answer. Practical question of can be accepted. Once you watch this video, one really important chapter which will play a major role in you clearing the exam faster is a chapter called residential status and scope of income. And if you're wondering where to start, this is the video. You need to start revising that. Guys, today it's fresh. After a few months, it will get behind after other subjects. So this video will help you get on track with this chapter. Guys, scope of income is all those income taxable in India. Guys, there are three kinds of people. One of them is a non-resident, and two are residents, RNOR, ROR, resident and not ordinary, resident and ordinary. And all three of them, their scope of income is different. Non-resident, deemed, earned, accruing, and received in India. Earned is when I get the money, accruing is till I receive the money, that is accruing. And RNOR is similar four incomes, but four plus one, year plus one. What is that plus one, guys? The income is earned abroad, but it's controlled, managed, or set up from India. CMS, that's a shortcut. So five incomes for the RNOR, and ROR is cracked. London, UK will also tax it. India will also. That's why he's crying. At CA final, we'll leave, but it is what you need to do. Ignore. And anything happened in the past year, whether taxed, untaxed, doesn't matter. So one. Let's talk about first 6 2, 6 3, 6 4. Get them out, then go to 6 1. 6 2 is for if your HUF is controlled or managed from India, whether partly or fully. As long as you would see the word India, it is a resident. Otherwise, it will be a non-root. It can be further bifurcated into ROR, RNOR, but we'll talk about it later. Conditions. Next, for a company, an Indian company who's registered in India, like Zomato, like Zepto, like all Swiggy, are all Indian companies. They are always resident. But Tesla, which is registered in the US, from India perspective, it is a non-resident. Unless, guys, they have effectively managed their company from India. Place of effective management. Not a very important concept at Inter, but if the place of effective management is in India, then even that foreign company can become a resident. And all others like partnership firm, etc. Their control and management, again, if it's in India, resident. If it's fully abroad, non. And if it's partly, India. The moment you see the word India, resident. Guys, as a government, you want people to be residents or non-residents? Because residents, guys, means more tax. Super. Now let's come to the section that will be in your exam, section 6 1. Residential status of individual. Guys, doesn't matter who's the individual. It could be an Indian. 182 days. If you spend 182 days in India, then are you a resident? Yes, it's a Lakshman Rekha. But if you're less than that, don't worry, there's another Lakshman Rekha for you. The next one says in this year, if you spend 60 days in India and the last 4 years, last means including this year, before this called preceding, guys, the last 4 years you spend 365 days, then also you may become what, guys? You don't need both conditions for, you need only one Lakshman Rekha. But if both are not fulfilled, then don't worry, we'll let you become a non-resident. This is sex 1. Now that you become a resident, we want to further classify you between ROR and RNOR based on additional conditions, section 6.6. In additional condition, guys, it's very simple in the last 7 years and the last 10 years. But who has the time to go back 7 years and 10 years? So we'll do flashback mode. You guys, which country do you see in your flashback mode? India. But Donald Trump, US. Elon Musk, US. So, guys, if you see India, then both the questions are yes, and you'll become a R1. And even if one question is N, it will become a R N O. But what are these questions? In the last 7 years, have you stayed in India for at least 730 days? Guys, some books have different numbers, but I've kept the same symbol, so greater than equal to 730 days. Or in the last how many years? 10 years. Have you been a resident for at least 2 years? Again, these are last years. That means not this year, before this year. Yes. If both are yes, ROR, otherwise RNO. While life was good till here, guys, there are two people whom the government really, really likes, and they don't apply the second Lakshman Rekha to them. That is basic condition to EV. If you are an Indian citizen who has left India this year for, and even working on a foreign ship is employment, by the way, guys. And V is if you're an Indian citizen like Priyanka Chopra or a PIO like Siddharth Malia and you're visiting India, then in both these cases, guys, which condition will not apply to you? So either 182, then you're a resident. If not 182, then you're a non-resident. Yes. While life was good, guys, some non-residents who were very happy being non-residents, the government said, listen, we've come to convert you from non-residents to resident, but not as ROR, only RNOR. That's why these guys are called deemed resident. Guys, in that we have two sets of questions: AIC 1, AIC 2. Of course, this AIC you cannot write in the exam. I've showed you how to present it. We've solved sums here. But A is applicability, applicable only to Indian citizens whose Indian income is more than 15 lakhs. And condition is they should not be taxed as a resident in any country. Then if no one wants to tax them as a resident, India, they are always there. And AIC2 is similar, Indian citizen or PIO. But what is a PIO? Someone whose parents or grandparents, all of them, no, even one, mom, dad, mom or dad, nana or nani, dada or dada, were born in India. Is Indian citizen or PI whose Indian income is more than 15 lakh and whose condition that this year 120 days, last 4 years 360. Is it similar to basic condition to? Yes. But remember, guys, you want to convert only those people who are rich. Rich means more than how many lakh? And that 15 lakh is dear plus one. Are we clear with this, guys? Yes. Next concept, deemed income. Guys, while all of this is great, we'll look at deemed income. There are 8 incomes called ISSD, bills. And the government says that these 8 incomes in the hands of non-residents, there is an India connection. So can we tax it? Yes. Let's see the India connection, guys. First, I. Is it a foreign company, one plus China? But do they have a business connection in India? That means they have an agent who sells their goods in India, guys. That income will also be taxed in India. Next, service rendered in India, the Japanese metro guy. Salary paid by government of India to people working abroad. We tax. But isn't that guy in France? Then we can tax. Yes, we can tax. France will also tax the people. But allowances are exempt. Remember under section 10(7). Next, guys, dividend from which companies? Next, IRS. Interest on money, royalty on patent, and fees for technical service. Why are we taxing someone abroad on this? Because the money, the patent, the technical services have been used in India. Guys, if you use it in India, we have the right to tax it. But the usage we will not check if the person who's paying is the government of India. And guys, only for interest, not for IRF, only for interest. Only when one non-resident is paying another non-resident interest. Why is India so interested? Because it has been used in India for business and profession. But if they use it for income generating activity, example, business is McDonald's, profession is CA firm. Income generating activity means buying shares. If they use it for income generating activity, then the government says we will not tax that interest. And last is gifts. If you are in India, a resident, and you're giving someone a non-resident a gift of more than of property, which definition you will see in chapter IFOS. If you give something in terms of property, if it's more than 50,000, the entire amount will be taxed. Guys, this is called deemed income, section 9(1). And each of them have a clause, section 9(11) to 9(1). Yes, remember, guys, in the exam, they will give you an individual. They will give you some days of stay in India. Go by one question, answer it. Don't jump to any conclusion. And then once you figure his residential status, they'll give you 5-6 incomes. And this question could be to 7 marks. My favorite income, after business income are basically earning incomes without working too hard. Example, your bank interest. Another example, your dividend income. And all these incomes go under a head of income, which is called what, guys? Income from other sources. If you're wondering where to start this head of income and how to do IFOS well, this is a good start. This video, guys, will help you do IFOS really, really well. So everyone, let's in the next 5 minutes, 7 minutes, 10 minutes, whatever it takes, let's recap IFOS. Guys, IFOS is the fifth head of income, but it is for us the second head of income, after which head of income, guys? House property. There are three parts to IFOS. The first part, general. Second part, and third part, guys, gift tax. Let's start with gifts. Something that we really enjoy is accepting gifts. So gift tax is always taxable from whose perspective? Giver or receiver, guys? Receiver. And we expect how many gifts every year? 10. Minimum 10, guys. That's why the section is 56 to 10. Whenever someone gives you gifts, there can be many gifts, right? From a t-shirt to a shoe to gold coin to even a house, right? The government says, I don't want to tax all gifts. There are three steps. First step. Guys, these steps are only for understanding. Guys, you will get the right answer. That only those gifts which are in the definition of property. And what is the definition of property, guys? This means sad job. Money, immovable property, shares and securities, bullion, and jewelry. The others are not so important. So first step, it should be this. Someone gave you a bike. Someone gave you a car. Someone gave you a gold coin. Someone gave you shares. So then you go to step number two. Step number two are those situations like marriage, etc., where the government says, I don't want to tax. And step number three, if you reach there, they have three categories: money, movable property, immovable property. In each category, not all, in each category, if the aggregate is more than 50,000, example, money 52,000, then how much will be taxed? 2,000 or 52? Think like Nirmala Sitaraman. Yes. So the entire 52 will be taxable. Movable also, and also immovable. Guys, money 32,000, movable property 32,000. Taxable? No, because each category should be more than how much, guys? Good. Let's go to step number two, guys. Situations under which there is no gift tax, and tell me the situations under which there is no gift tax, guys. Good. Cat, tip, and COVID money received from NAH. Guys, D for death, I for inheritance. Then T for trust, a trust, a fund, or a local authority giving you money. Next, M for marriage. Guys, not marriage anniversary, only not son's marriage, your marriage. COVID treatment, around COVID death up to how many lakhs? But if it's coming from your employer, then there's no limit. Next, relative. Yes, relatives can be many, many, many. In gift tax, there are 232 relatives. Two, of course, not the illegal way, guys, your spouse. Next, three, and sister. Your brother and sister, your spouse's brother and sister, and your parents. And two LAs, LDs means people above you, ascendants, and people below you, that is children, grandchildren. Same for your spouse's parents and children. Guys, lineal means only parental. That means your dada, dadi, not your nana, nani. And guys, what about stepsisters, step cousins? No. What about other children? Only your children. What about my niece? Is she my relative? No. Next, guys, from LA. LA is local authority, and HUF is basically an HUF when it gets partitioned. PM. Partition. When it's partition and the members, guys, get money, guys, in that case also there is no gift tax. Are we okay with this? Next, guys, in gift tax, there is a part which is called IB. Inadequate relates to a benefit. Guys, example, you got jewelry of 10 lakh for only 3 lakh. What is the benefit? You got a property of 1 crore for only 30 lakh. What is the benefit? No one gives you such a big discount. What are you paying? Tax, black money. The government taxes you on that. And they said if there is IB in the exam, then you need to tax it. Now let's see IB. For step one, the benefit should be in the definition of, guys, what if you get an iPhone of 1 lakh for 40,000? What if you get t-shirt of 1,000 for 200 rupees? No. It should be in the definition of. Step number two does not apply. And step number three, if the benefit is more than 50,000, an immovable property, A or B, 50,000 or 10% of sale consideration, not stamp duty, wali, sale consideration, whichever is 50,000 or 5 lakh, 50,000 or 10 lakh, whichever is higher, up to that benefit is okay. Now in the exam, what if guys they give you two stamp duty value? Date of agreement also, date of registration also. Which one would you want to take? You want to take whichever is lower. What if lower is date of registration? No condition, take it. What if lower is date of agreement? And there's a condition. What is the condition? That on that day or before that day, example guys, 12th August. So 12th August or before 12th August, you should have paid some token by modes other than CBC. It's a shortcut for no cash, no bearer check, and no cross check. Yes. What if I pay by account pay check? GPay करो, Paytm करो, कुछ भी करो, but CBC. Don't do CBC. That's the logic, guys. Yeah. Next, we come to dividend tax. Guys, are dividends taxable in India? Shortcut is DTI. Dividend taxable under IFOS. What if you're a student? IFOS. What if I'm a CA? And what about Rakesh Jhunjhunwala when he was alive, guys? IFOS. Only under which head, guys? IFOS. And if you remove money from a company without calling it what? Dividend, then the government says we'll call it deemed dividend. There are now 6 sections for deemed dividend. Very, very careful. Section 222. A for the company is giving out gold coins to the shareholders. Is it taxable? P for bonds, debentures, and preferences. Now a company has given bonds, but against the bonds they will pay what? Money. So money will go from the company to the shareholder. So bonds also, debentures also, preferential, but not equity, because against equity they don't give out money generally. See, if you close the company and give out assets, that also. D. If you decrease share capital, that also. While this applies to all the companies, the next one E only applies to closely held companies, which is example private company. Now, what if a closely held company is giving loan to a beneficial interest holder? What is a beneficial interest holder? Someone holds 10% on it. If you want a loan, go to a, because if a company will give you a loan, it will be considered as deemed, whether the loan is given directly to B or to an entity in which he has control. Control means 20% substantial interest, or it's given to a third party who passes the money to a BIH. In all three cases, is it deemed dividend? Three cases when that deemed dividend will not apply. BPF. If it's not a loan but a business advance. Business advance is to be used for which purpose? Business purpose. If it's a public company or if the company's business is lending. In these three cases, will it be deemed dividend? No. Guys, what if I repay the loan? Still. And what if I pay interest? Still, it will consider it as deemed dividend. And last, guys, in F, which is absolutely new, finally the company is announcing a buyback. You have a share of 1000 rupees, the company is buying it back for 1200. How much are you getting, guys? No, you are getting 1200. That will be deemed dividend under which section? 222F. But what about that 1000 that we will see in capital gain chapter as a loss? Everyone okay with this, guys? Yes. Now, while deemed dividend is a great concept, it applies only if the company has profit. What if the company's profit is 300? What if the company's profit is 200? 100? Loss of 5 lakhs. There's no concept of deemed dividend. Deemed dividend is only on the profit. What if the company keeps the profit? But if the money goes from the company to the shareholder, it is called deemed dividend. We last come to general part. In general part, guys, there are some incomes which will go under IFOS. I'm giving you some incomes. Dividend income, IFOS. Interest on banks, casual income, gift. Guys, interest on compulsory acquisition. Let's talk about what this is. Who took away your house? Government. And did they pay you money? Yes. But did they delay? If they delayed for 4 years, guys, and they pay you interest, will it be taxable? In which year will it be taxable? The year of receipt. Can I go back to those 4 years? But they give you a standard deduction of how much percent? Next, guys, any non-business contract, example, McDonald's offered you a non-veg burger. Did they pay you money as compensation? Yeah. Forfeiture or cancellation of any advance. Is that IFOS? Yeah. Keyman insurance, KT. What is keyman insurance? It's a life insurance taken on the key man of a company. Guys, if the company gets the money, if you yourself get the money, salary, and if your family gets the money, guys, and guys, if you get pension, it's taxable under salary. But when you're no more, your family will get family pension taxable under IRA. If you spot any of these incomes, open which room? Park it there. That's all. Yes. And casual income, guys, if you get lucky, you actually land on the full amount. Example, I win a lottery of 10 lakh. My lottery ticket cost is 1 lakh. Yes, I will not be taxed on 9 lakh. I will be taxed on the full 10 lakhs. If I go to Goa casino, bet 1 lakh and I win 10 lakh. Next, while there are incomes, there are also deductions. Three main deductions. First, interest on compulsory acquisition. 50% flat, standard deduction. Next, on dividend income. See, on dividend, actually, you don't spend any money. So, no deduction except one. If the shares have been bought on a loan, the interest you get maximum 20% of the dividend money. And guys, on family pension, there's an amendment. So I'll talk about in the amendment. So there's a small change there. But otherwise, guys, whatever pension you get, so there are two amounts, A or B, whichever is lower. Next, guys, disallowances. In disallowances, guys, the government says, are you spending money? Yes. But I will not give you a deduction because there's some problem there. The shortcut is poor wins cash income. I'm just opening that. Yeah, miss. Poor wins cash income. P is personal expense. Any personal expenses have no place here, no deduction. If you are paying any money outside on which you should have deducted, if you don't deduct TDS, fully disallowed, 100%. Example, I paid 1 lakh. Why not? Because the government has not got TDS. If you are paying to a resident in India without deducting TDS, then the government is upset, but only. So if I pay 1 lakh without deducting TDS, I'll get 70,000 deduction, but 30,000 I will not. But I will get the deduction when the government gets the tax. Next, wins. Against winnings, do you get any deductions? No. Next, guys, is it okay to pay some expenses in cash? But only up to 10,000 per person per day, not per month, per person per day. I paid someone to repair these ACs 8,000 in cash, 18,000 in cash. So 10,000 will be allowed, right? Guys, the moment you exceed it, fully disallowed. And last, guys, income tax. As a person who's earning income, will you pay income tax? But the government says, sorry, income tax we will ignore. Municipal tax, GST, only one tax to ignore, guys, which is good tax. And this same poor can tax income will also come in PGBP tomorrow when you see PGBP. Guys, so after you've done a few chapters, guys, and you reach a stage where there is some income and as a family, Mr. A, Mrs. A, minor child A, then you know there is a chapter of which, guys, clubbing of income. Very small chapter, very easy to understand chapter, and a practical chapter in the exam. Get your 4 and 5 marks secured by doing this chapter well. Guys, clubbing happens because if it's your income, can you pass it to someone else? Yes. But the government has a philosophy, the dog always goes back to its. So they say if it's your income, pass to someone else, it will come back to you. But not to everyone, only how many relations? Four. The government says if it's your spouse or son's spouse, son's wife, or minor child, or HOI. In these four cases, if you transfer any asset, example, you transfer debentures to your spouse, the debentures will not come back. So is the government restricting you to gift people around? No. They're saying asset, there's no problem. Income will come back to you. Only in how many cases? What if I transfer asset to a major child? He will pay the tax. What if I transfer it to parents? They will pay the tax. If there is income, there will be tax, but it will not come back to me. Coming back to me will happen only in how many cases, guys? Four. Let's see one of them every carefully, guys. First is spouse. If you transfer any asset to your spouse directly, will the income come back? Yes, unless it is AS. What is A for? Adequate consideration means have they paid the full amount? Yes. And S is in those cases, income will not come back to you. Next, guys, son's wife. In India, guys, patriarchy rules or used to rule, and hence women of the house never used to earn so much money, and hence the second person whom people plan the taxes was son's wife. The government cut it short that if you transfer asset to whom? Son's wife directly, will it come back? Yes. Next, guys, minor children. Guys, every income of minor child will be clubbed in the hands of the higher parent. First, can minor child children have income? Yes. FD income, shares income, rental income, YouTube, TikTok star, ads, movies, etc. So in that case, guys, all that income will be clubbed in the hands of the higher parent. Guys, first determine mother and father, whoever is. Once it is clubbed in the higher parent, every year it will be clubbed in the same parent's hand. What if there is one parent? and there's no parent, then guardian. Now, while you're clubbing the income of the minor children, guys, remember to minus 1,500 per child whose income is clubbed. What if you have three children? 1,500 each. What if you have four children? Per person whose income is clubbed. But, guys, two exceptions. First, if the child has any income using a skill, intelligence, or manual work, they have to specify that, then that income will not be clubbed. It will be added in that person's hands only. And if a disabled child, no income. I'm giving you some examples. You win a quiz contest, same income. Using that money, you make an FD and you have interest. Will that be club? Yes. Guys, generally accretion to income. Accretion means that is not club. Example, I give debentures to my wife, interest 1.2 lakh. Will it be club? Yes. With 1.2 lakh, she buys gold. There's no income only. From that gold, she has capital gain. Will that come back? No, because that's called what? Accretion. So clubbing happens only on which level? First level. But for child guys, accretion happens at every level because they don't have a mind to think of how to make new incomes. Yes. Next, minor married daughter is a concept in house property, but here guys, minor married daughter is minor child. Next guys, HUF. If I am transferring an asset to the HUF so that they use the basic exemption limit, the dog will come back to the. And what if the HUF gets partitioned? Even then, the income will come back to the owner. Guys, value club income, exempt incomes, no club because if there's no tax, and when you compute, then the final amount has to be club. Uh, the relationship of husband and wife should exist when you're transferring the asset also and you're running the income. Example, guys, you got engaged, you transferred the asset, then you got married, and the income will it be club? No. So it has to happen at both ends. Now, four very peculiar things. One is called CN. Guys, what is CN? Control and not link. What is it? You as a surgeon have control. Control means 20% or more substantial interest in any entity, and that entity is paying salary, remuneration, commission to your spouse, which is not linked to a qualification or to our experience, then the income will come back to you. Is that okay, guys? That's CN. What if it's linked? Then it will not come back to you. Next is butterfly. Husband, wife. Both have what interest? Individually or separate? Separate 20%, and both are getting what? Salary, remuneration, commission. Whether linked or not, it doesn't matter. Will the income come back? In whose hands? Oh, by the way, in CN, guys, control doesn't have to be only individual. Individual along with relatives. And what is relative? Clock. What is in this clock here? Siblings, children, parents, and grandparents. So what if I hold 10%, but my brother holds 15%, 25%? Are we okay with this? Next, cross transfer. Oh, guys, can I transfer some asset to my friend's spouse? And can he transfer it to my spouse? We are doing two interrelated transactions to evade. The government says this is cross transfer, and will clubbing apply? On the common amount, clubbing will apply, but with the respective relation. My spouse's income, my hand. His spouse's income, his hand. Are we okay? And one more, guys. If I give an asset to my wife, example gold, and she does some business with it, will the income come back to me? In a proportion determined on which date? First day. If I transfer 5 lakh of gold today on the 14th November, guys, Children's Day, then will that income come back this year? Because this year we'll see on which date? Next year? Yes. You have to see proportion. Giving you an example. I gave gold of 10 lakh. She had gold of 10 lakh. Half half. 1 is to 2. Are we okay, guys? 1 is to 1? Yes. All right. And section 64 for spouse. 64 1. Son's wife. Minor children 64 1 8 because they are A1, and HUF is 64 2. Well, this is the bigger part. The smaller part, which does not only apply to individual, it applies to everyone. They say that if you have some income and some asset, but you choose to only transfer the income without transferring. Example, guys, I transfer my salary to someone, but I work somewhere, or it's my house, but the rental income is going to my neighbor. Is that right? No. The government says this is wrong. So the income will go back to the owner or the transferor. Are we okay? Section 60, will clubbing apply? Yes. Next, I transfer income and I also transfer asset, but it's a revocable transfer. What kind of transfer? Revocable means I have the right to take it back. Then, yes. Then the government says this is a fake transfer. Again, will clubbing apply? Yes. The only way to avoid clubbing, is irrevocable transfer. I give away the asset. I'm Narayan Murthy. Can I give away shares to a trust? Will income come back? Because the transfer is irrevocable and revocable. What's the difference? RB. You have the right to revoke. Do I need to exercise the right? No, you should have the right. And B is if I enjoy the benefit, guys, is that a revocable transfer? I'm giving you some examples. You tell me revocable or irrevocable. I give shares to a friend. Bonus will come back to me. I give house to a friend of mine. No, I cannot never take it back. I give a house to a friend of mine. The rental income will come back to my mom 20%. How much percent? Super. Guys, even if it's 20%, the entire transfer is what? Revocable transfer. It's a fake transfer. Fake basically for you and me to understand. And that is section 60, 61, 62. And revocable transfer is defined under section 63. What is RV? Right to revoke or right to enjoy the benefit. Ultimately, guys, in the exam, they will not tell you it's a summon clubbing. They will just say Mr. A, Mrs. A, and children. And you'll have to basically see in whose hands it will be clubbed. And ultimately, guys, if you have a pet, the dog will always go back to its. All right, a chapter which is really, really small. But surprisingly, guys, this chapter has not come in the paper only twice in the last 10 years or in the last 7 years. This chapter has not come at CA Inter only twice. And surprise, this same chapter has never come at CA final. It is a chapter which is called set off and carry forward of loss. Guys, because it does not appear at CA final, its importance is really high at CA Inter. And most often than not, if you are a May 25 student or a September 25 student, then already, guys, I'm predicting this question to be in your exam. Let's try and see a small recap video of this entire chapter. Guys, while the sum comes in the exam, how will you identify that this sum is from a chapter called set off and carry forward? There will be losses, long-term capital loss, business loss, depreciation, all those numbers will be there, which give you an indication that you need to do this chapter. Again, when you're doing this sum, you will have to first make a rough work. You have to make a small diagram and put all the numbers there. Only then can you convert that into a fair table. Let's try and see, guys, what is this? This entire chapter works on the example of a blood bank. If you recollect, today you are recollecting, guys, but in a few months you'll forget. So try and recollect. When you require blood, the first people you go to is family. If they give you blood, it's okay, great. If they can't give you blood, the next person you go to is outside. Outsiders basically means neighbors. And we have how many neighbors, guys? Four. Each of us have four neighbors. And if they are also not enough to give you blood, guys, then you will come back to whom? Family. And you will sit there and stick around and tell your family that you have to give me blood. Yes, no option. Same thing happens with losses. In losses, there are how many heads of income, guys? Five. In case there are losses, let's look at step number one. In salaries, guys, can there be a loss ever? So we'll not even look at family for salaries. In house property, can there be a loss? You know, guys, SOP, there can be a loss of 2 lakh or it can be a loss of 30,000 up to those numbers. LOP also sometimes can be a loss. And can the family help each other, guys? Yes. SOP loss 30,000, LOP profit 40,000. Can it be set off? Yes. What is the net amount, guys? 10,000. Next, go to PGBP. PGBP has three types of businesses. You know from the last chapter of PGBP, guys. First one is normal business. Second one is speculative business. And third one is specified. Guys, speculative, you know, is intraday. Specified is, those 100-bed hospital. And everything else is normal. Normal means non-speculative business. Guys, well, all of them can have profit. Profits is not a problem. But if there is loss in speculative and specified, example, 1 lakh loss. How much lakh? 2 lakh. And normal business has a profit of 3 lakh, guys. Can I set it off? No, because, guys, these losses, speculative loss and specified loss, are unique blood. Unique blood basically means they can't go even within their family. Then how will these losses be set off? Speculative loss only against speculative profit and specified loss only against specified business profit. The next head is capital gain. In capital gain, if you buy and sell assets very fast, short term. If you buy and sell assets after a really long period of time, guys, long term, which we will see in the next chapter, which will open up, that is capital gain. Now, if there is short term capital loss and long term capital loss, one of them is unique blood, which is long term capital loss. Long term capital loss of 1 lakh, short term capital gain of 1 lakh 10. Can I minus it? No. Because this is which blood again, guys? Unique blood. And last, guys, is IFOS. In IFOS, general incomes are interest income, Dividend income, casual income. Casual income, guys, if you win 1 lakh rupees in a lottery and you want 5,000 rupees deduction of lottery tickets, will the government allow that? The government, in fact, will tell you a slogan. If you get lucky, the government wants to get lucky on the same amount. So no deduction. In fact, you can't even set off any losses. The best thing is in the exam, if casual income comes, put that in a box because always. But what about a casual loss? Example, I go to a casino and I lost 20,000 rupees, guys. Will the government be with me? No, that has to be completely ignored. And there's an activity which is very unique called owning and maintaining race horses. Is it betting on race horses? No. You are owning it and maintaining it. And that income, although it's a business income, it will always go under. And there you can also take losses, which are unique blood. So OM horses is unique blood. So how many unique bloods, guys? Four. Speculative, specified, long-term capital loss, and OM horses. Great, guys. Now step number two. You tried taking help from your family, but now family is not enough, so you go outside. Salary will never require to go outside. House property. House property room is friendly, but shy. So that means it can go to any head, but maximum up to 2 lakh. If they take 2 lakh from salaries, can they take 30,000 from other? No, no, no. Maximum 2 lakh aggregate. Next is PGBP. Guys, PGBP, of course, unique blood cannot go out because if you can't go within the family, you can't even go outside. So normal business, can I go outside? Yes. But again, guys, here's the catch. It does not talk to whom, guys? Salary. Tomorrow when I see you, I'll tell you the reason why it does not talk to salaries, but they had a fight, so they don't talk to each other. Next is capital gain. Which is again, guys, capital gain. Capital gain is that snob family which does not talk to anyone. So is it that non-friendly family? So what if I have a long-term capital loss of 1 lakh? Can I set it off? No. Guys, it's unique blood. I can't go even outside. Everyone okay with this, guys? And OM horses, of course, is unique blood. Basically, that means, guys, can we go to outsiders? Yes. And after these two steps, also, if the cake is not over, guys, can you put in the fridge? And can you consume it tomorrow or day after tomorrow? That's called step number three, carry forward. Guys, losses can be carried forward generally for how many years? Salaries will never have a loss. House property, 8 years including this year? No. Guys, if this year is previous year 24, 25 plus 8, that means from after this, how many years, guys? 8 years. What if I have some loss after 8 years also pending? Lab. And if you don't understand lab, guys, it's a medicine which has expired. What do, guys? You throw it. Same way, this loss, extra loss will also be thrown away. Next is PGBP normal business. How many years? Speculation business has an element of gambling, so they are only allowed 4 years. And specified business is good for the economy, so indefinitely. Basically, that means even 9 years later, can you set off that loss? Yes. Capital loss can be carried forward for 8 years. And OM horses has the element again of gambling. So how many years only, guys? 4 years. While all this is great, guys, there are some additional points which we now need to focus on. I have discontinued a business this year and I'm starting another business. Can I set off this loss? Yes. Discontinued business is also like a normal business. You can set off the losses, but how many years, guys? 8 years. Next, guys, there is an amount called UAD, unabsorbed depreciation. If my profit is 100 and my depreciation is 105, how much can I minus? So what does that 5 become? Unabsorbed depreciation. And can I carry it forward? Yeah. But before this, guys, let me tell you, any loss that you carry forward to the next years gets a stamp called quarantine stamp. What does this mean, guys? If I have a house property loss of 20,000 this year, which is carried forward to the next year that house property loss, can it go outside? No, because it has which stamp, guys? So any loss which is carried forward gets which stamp? Quarantine stamp. But UAD is an exception. It has a shortcut called IQ. What is I first? That just like specified business, this loss can be carried forward indefinitely. So in the exam, they say UAD of 9 years back. Can you still set it off? Yes. And there is no quarantine stamp. It can go to any head except salaries. Why? Because it comes out of which room, guys? PGBP. Next. Just same aspect which applies to UAD also applies to SRE and FP. Scientific research expense and family planning expense. Even both those get a superpower of IQ, indefinite and no quarantine stamp. Yes. Next, guys, if an activity is exempt, like agriculture income, will the government tax it? No. Same way, if you have a loss from that activity, the government will also not set off that loss. Is that a fair bargain? Yes. Share of profit from a partnership firm. Is it exempt? Yes. So share of loss will not be set off. Guys, casual loss we've already discussed will never be set off. Next, while there's an order of eating from the fridge, while there's an order of friends also, first best friend, next friend, etc. Guys, there's an order of set off here as well. Guys, they say that if I have some profit, which is let's say 1 lakh, and my losses are too many, then what is the order? First, current year. Current year expense, current year debt has to be minus first. Next, anything which is being carried forward because it has an expiry of how many years? 8 years, sometimes 4 years, that you'll have to minus. And then, guys, whichever does not have an expiry like UAD, etc., then you can minus as the order of set off. And guys, the government has made a special request. They have said that I will allow you to carry forward your losses, but you have to fulfill one condition. You have to file a return by June. When does the year end, guys? 31st March. After that, if your due date is July or October or November, please file a return by then. If you don't file it, then there is a consequence. That year's loss cannot be carried forward. Can I set off? Yeah. The previous year's losses also can be carried forward, but only the year where you don't file a return, that year's loss cannot be carried forward, except two exceptions, right? HT. If it's a loss from house property and if it's an unabsorbed depreciation, the government is happy with those losses. You bought a house, you bought many assets, so the government says these two losses you can carry forward even if you file a return late. Are we okay with this, guys? Yes. So this is a chapter. While you're solving it, be careful about quarantine stamp. Be careful about unique blood and be careful about 8 years because guys, if 8 years is already over, then what will happen to that loss, guys? Slap. Try and solve all the exam questions first because they are more challenging and then go to our book questions and each question wise will get you closer. Yes, on a nice Sunday morning, afternoon, guys, while Sunday disappears very fast, it starts and ends before we even realize. One thing that starts but doesn't end is a chapter called PGBP. Yes, it's a big task, but unlike many things in life which are difficult, this is difficult, but it is equally rewarding, not just from your exam perspective, but even in real life. Till today, guys, every year, whenever I earn money, I'm in dedicated in the room of PGBP, business and profession. Most of my income is in business and profession. And because I know this chapter well, I can take a lot of deductions and reduce my tax liability. So, a very useful thing practically also. But of course, in your exam, the first question, compulsory question, which is for how many marks? 15 marks, whether you're giving May 25 or September 25 or maybe even Jan 25, guys will have a dedicated sum on PGBP. Yes. So to get the maximum, let's make a nice revision video. This is a revision video that we'll watch. Whenever you feel I want to revise PGBP, this will be a quick recap of the entire thing in PGBP. In PGBP, guys, is it similar to IFOS? Yes. We have incomes, we have deductions, and we have disallowances. But in the exam, it's an indirect way of asking. They'll give you a P&L account. Will they give you incomes? And they'll give you expenses and they'll give you net profit. You will start with what? Net profit. And then you make adjustments, which I call as Diwali Safai. If it does not belong to PGBP, what will you do? Remove and take it to whichever head it belongs to. If there's some expense which is not allowed in PGB, what will you do, guys? Add it back. Yes. So all that, but right now we'll do a direct way and direct revision of PGBP. First, the incomes. Are there some incomes which only belong to PGBP? Yes. General incomes like McDonald's sales of burgers, Yesh's Academy fees, all that is called which income, guys? General. Guys, can I sell my export benefits? That will also go under PGBP. Can I get a non-compete fee? Again, which head? PGBP. Can I get gifts? But aren't gifts supposed to be in IFOS? Yes, but gifts in relation to business and profession, guys, they will come here. Any gift? That means, guys, will you check step one, step two, step three? Nothing. Next, guys, as an association like ICI, can I also earn income from seminars, etc.? That will also go under PGBP. Guys, as a person who's employed previously with EY, my salary used to go under salaries and interest still goes under bank, IFOS. But if I get P salary, partner salary or P interest, partner's interest, basically that will always go under PGBP. Guys, things like that will always find their space in PGBP. And as a businessman, if I have stock, if I sell the stock, PGBP. But even if I convert my stock into assets, still it will go under PGBP. These are my incomes under PGBP. Fairly simple from an exam perspective. I don't think there will be any challenge. And if there's a business contract, example, someone had to supply for this AC, someone had to supply remotes by today. If they don't, there's a penalty of 5 lakh. Is that my income? Yes, that will also go under which head, guys? Maybe. Next, we come to deductions. Guys, in house property, how many deductions were there? Three. But in PGBP, you can take 300 deductions as long as you can convince that it's connected to your business and profession. For a land and building, guys, can I be paying rent? Can I repair it also? Can I pay taxes also? Can I do insurance also? Yes. Same thing for plant and machinery and furniture. Example, Yashas Academy, guys. Will they be spending on all these maintenance? All that will be a deduction under PGB. We move to the next one. Guys, in scientific research, can you spend money on scientific research? Who's happy when you do that? So they say you are special and any expense that you incur, if it's revenue expense in the last 3 years also of raw materials and salaries, will you get a deduction this year? Yes. Plus any capital expense, example, you bought a microscope for how many lakh? 5 lakh. It should go where? Balance sheet. But you will not get only depreciation because that is for normal people. You are special. You will get a straight 100% deduction. Will I get both depreciation and deduction? No. You'll only get 100% deduction. Except land. Land, you don't get any deduction. Guys, if I'm not doing any in-house scientific research, can I donate money? I can donate money to associations, to colleges, to USIN. What is USIN? Universities, specified persons, IITs, and national laboratories, and even to Indian companies whose objective is scientific research. And whatever money I donate, can I take a deduction? Even if it's not connected to my next. Guys, while this is special, there's one more special thing. If you do any specified business, the examiner will tell you specified business, but if they don't tell you, super fast bike can cover 3 hospitals, 3 workshops, 3 institutes. You can look at some page where you have the list, and guys, every letter has a short form. You have to just identify that these are specified business. Example, I start a 100-bed hospital, guys, and I buy a building for 70 lakhs. Guys, is the government happy? So they will not give me depreciation, but they will give me 100% deduction provided I use it for 8 land. What is 8 land, guys? I have to use it asset for specified business, any specified business for how many years? Next, if I have any loss from specified business, that can be set off only against specified business profit, any specified business. Next, I need to go for a audit. And if I'm buying plant and machinery, it should be new. But having said that, 20% second hand is okay. So if my overall plant and machinery is 1 crore, 20%, that is 20 lakh second hand is okay. What if I buy 22 lakh? Then on 20 lakh, I'll get 100% reduction. On the 2 lakh, I'll get depreciation. Are we okay with this, guys? Yes. And guys, if I convert my hospital into a mall, is it possible next year? Business decision. The government says no problem, but I want RT. What deduction did they give you? 70 lakh. They'll reverse that, but after giving you depreciation. Are we okay with this, guys? Yes. This 8 line condition is in specified business. Next, before starting a business, can I have preliminary expenditures? Yes. That expenditure the government says I will give you, but that I'll not give you as a cake, but as a pastry. In how many parts? But there are some conditions. Preliminary expenditure should be revenue expense only. If it is an expense in the nature of project fund, what is project fund? Project report, feasibility study, engineering study, or market research. That either you do in-house or you go to an approved source. You cannot go to any random person. If you go, I'll not give you deduction. And last, guys, they put a limit or a cap. They said you can incur preliminary expenditure, but the deduction we will give you is only 5% of your cost of project. And if you're a company, then 5% of cost of project or 5% of capital employed, whichever is higher. So guys, my preliminary expenditure is 10 lakh. How much is it? My cost of project is 1 crore. 1 crore into 5%, 5 lakh. They'll not give me 10 lakh, they'll only give me 5. Are we okay with this? This is the capping. Guys, cost of project changes every day. So you'll take it on the last day of the year. And capital employed means equity, preference, debentures, and loans. Again, on which day, guys? Last day. And guys, if it's foreign loans, you will include it only if it's more than 7 years. Guys, all this I'm teaching you in the exam, it will be very simple. You have incurred preliminary expenditure of 5 lakh. You will get a deduction of 1 lakh. Why, guys? Because in how many parts? 5 lakhs. Are we okay with this? And last, guys, if any company or any entity incurs any VRS expenditure, voluntary retirement scheme, then they will get the reduction, but not in one part, but in 5 parts. This is section 35D. While all these expenses are great, there are some expenses which are specific. Let's talk about that. Guys, can I pay insurance premium? Yes. Can I pay bonus and commission? As a businessman, can I take loans and pay interest? Yes. Even loans on dividend, can I pay interest? Yes. But not interest on income tax. Not interest on interest, not penalties, because that is not allowed in PGBP. Next, if I don't want to take business loans, can I issue zero coupon bonds? But what's the point of zero coupon bonds, guys? As a company, I will issue them in 80 rupees, example, and I will pay back 100. So what is my cost? That 20 is it debited to this year, next year, or next to next year? Guys, just like we spread butter on bread, we will spread them over the number of years. If the date is today's date, 17 November, it will go to 30th. And if it's 7 November, first. So you will do the number of calculation months and then you will spread it. Not very important again. Next, very important. If an employer is paying salary to the employees, will he get a deduction? Not just salary, guys, he can also contribute to the provident fund or NPS or gratuity fund. Guys, is it taking care of the employees? So will the master get a deduction? Yes, but the government has only said, listen, you please pay. You have to not pay today, you can pay by John. What is John? After the year ends on 31st March, you need to file your returns by either July or October or November. Next. Guys, this is master's contribution, so he can pay till John. But can a slave, that is an employee, can he or she also contribute? Yes. They contribute indirectly. They tell the employer that out of my money that you're going to pay me, take some money and put it in the account. Is that right? Can the employer misuse that money? Yes. Example 17,000. Now, what if the employer misuses it? So the government has made a rule that 17,000 will first be added to whom? To the employer's income, to the master's income, and he will get a deduction only if he pays that amount, not by John, next month. Are we okay? So for November, so guys, everyone, master's contribution and slave's contribution, which has an easy deadline. Master, he can pay by John, which has a strict deadline. Slave's contribution that has to be paid by monthly pay. In a business, if someone does not pay me, what is that person called? Can I take a deduction for bad debt? Yes. Example 7 lakh. Can I take a deduction? Yes. And if any amount is recovered later, it's called bad debt recovery. It will be taxed in the year you receive it. Simple logic. If there is no income, but if later there is income, there will be tax. You wanted a deduction of 7 lakh. Officer gave you a deduction of 5 lakh only. So indirectly is already taxed you on 2 lakh example. So now any recovery up to how many lakh? They will not tax you again. You recovered 2 lakh 20. Only 20. You recovered 1 lakh 80. Nothing. No tax. Next, guys. As a businessman, if you think for the country and if you spend money on family planning expense, example, you distribute brochures, make a movie, etc., the government says thank you and they would like to give you a deduction. For revenue expense, full. For capital expense, in how many parts, guys? 5 parts. But this deduction is given only and only to Indian companies. When you drive on the highway, you pay a toll because the highway is so good. Same way, guys, when you buy shares on the stock market, BSC, NSE, etc., you have to pay a small toll called STT and CTT. Of course, you need to pay brokerage also, but brokerage you all know, STT, CTT is new. This toll or this amount, guys, is it allowed as a deduction? Yes, in PGBP because your share trading income is there, so you'll get this deduction. While all these deductions are there is a dustbin section called section 37. They say any expense connected to business or profession, don't worry. If you can see the connection, you can take a deduction under section 37. Just make sure they're not IC. They should not be illegal or bad in law. Bad in law means illegal. And any CSR expense. Only two CSR expenses allowed. Scientific research and excellent, guys. While these are all deductions, let's go to disallowances. Disallowances are very similar to IFOS. Let's talk about IFOS and PGBP disallowances, guys. Poor politician wins slash UPN. A small difference. IFOS it was different. Here it is slightly different. Let's talk about the first P. Personal expenses. Guys, today is Sunday. I'm going out for lunch with some friends. Guys, can I take a deduction? No, because our expenses. If I pay any money outside India without deducting, the government says, listen, you didn't deduct TDS, I'll not give you deduction. If you pay to some resident in India without deducting TDS, you can take deduction, but only 70, 30% you can't take deduction. Guys, these deductions you can finally take when the government gets the tax. Next R. Are you paying something excessive? Are you paying something? But who in India will pay excess money, guys? You are paying it to your relative. Guys, earning excess is not a problem, but when you spend excessive, the government has a problem there. You were supposed to pay some relative 1 lakh, but you paid 1 lakh 25. How much is excess? The government says that I will not give you deduction, and if you've taken it, we will add it back. Now, guys, excessive, expense, but what is relative? They don't call it relative, they call it specified person. Guys, who is relative first? Clock. On this side, siblings. Below, children, parents, and grandparents. Oh, sir, so what about that 232? That is only for gift. This one is a special definition of relatives. Everywhere else it's used clock. Next, guys, plus any person in which you have substantial interest. Are we okay with this, guys? Yes. Now, guys, giving you example, I was supposed to earn 1 crore, I earned 2 crore. No problem, higher the income. But I was supposed to give a relative 1 crore, I gave 1 crore 20 lakh. 20 lakh. Are we okay with this, guys? Yes. Poor politician. If you put advertisements in political magazines or political souvenirs, that will not be allowed. Next, wins is only in IFOS. Cash. Cash transactions, please limit it to 10,000 or 35,000 is when you are paying to a GT goods transport agent. If you cross these limits, fully disallowed. Example, I paid cash to repair 12,000. No means fully disallowed. But there's a list. Example, if you're paying directly to farmers, fishermen, animal husbandry, if you're paying to cottage industry which don't use electricity or power, if you're paying to some person who does not have banking facility, if you're paying to an employee retirement benefit up to 50,000, or an employee who's not in office for more than 15 days, and you're paying him salary in cash, it will be allowed provided TDS is deducted. So these are some exceptions in a rule called Rule 6B. Next, guys, UPI. Any unapproved fund like Provident Fund, NPS, gratuity, all this should be approved. If you put money in unapproved fund, will you get the deduction? No. Next, guys, while provisions are great in accounting, it's a bad word in tax. Any provisions, will you get deduction? No. Provision for bad debt. Actual bad debt. Yes. Next, guys, income tax. Guys, in any tax is allowed as a deduction except as a businessman, I paid three taxes: municipal tax, GST, income tax. Guys, municipal tax, I'll get a deduction. GST, I'll get a deduction, but income tax, no. Guys, can I pay interest on income tax? Yes, but you'll not get deduction. Can I get a refund of income tax? Yes, but that is not income. The only thing you will recognize excellent is interest on refund. Is that your income? That will go under IFRS. Are we clear, guys? This income tax has come 4 times in CA inter papers. If you're wondering what comes in your papers, this is what comes in your paper, guys. Yes. Now, while you're done with deductions, we now move disallowances. Also, we've done. We now move to additional points. Guys, in India, do businessmen have to maintain accounts? There's a section called 44AA. Arrange. As a professional, we'll have all of them. So in the last 3 years, if in all the years their turnover is more than 1.5 lakhs in all the years, then they in this year have to arrange their accounts. Which accounts? P&L, balance sheet, cash flow, and keep them for 6 years. And as a businessman, there's Lakshman Rekha. If your profit is more than 1.2 lakh or turnover more than 10 lakh in any of the last 3 years, guys, that means you have to arrange your accounts. This number has changed for individual nature. The turnover is now 25 and the profit is now 2.5. This, even if you ignore, guys, no problem, because this is not important. But what is important is the next one. If you're a certain big businessman or big profession in India, after the year ends on which date? 31st March, you will take these accounts and you'll go to a CA and ask him to do your audit. Audit means check. Guys, he will check you, and if it's all right, he'll give a report. If it's wrong, he'll point it out. Guys, this is section 44A. Audit the books. Now, who needs to go for an audit, guys? Only big fish. What is a big fish in professionals? If as a professional your turnover is more than 50 lakh, and a businessman if your turnover is more than 1 crore. But this 50 lakh has now given an option of 75 and 1 crore has become 10 crore only if your cash transactions are low. So low cash transaction, higher limit. Now, guys, when you cross that limit, example as a CA, guys, let's say I don't take any cash, then what is the limit? 75 lakhs. If I don't take any cash, what is my limit? 75. Let's say my turnover is 85. Then I need to go for a audit. Are we okay with this, guys? Next. Guys, while the world of tax is complex, there is something very simple there called presumptive. Section 44AD, assume deduction. The government says you tell us your turnover and we will assume your profits to be 6% or 8%. If it's in the bank account, alternate bank account, 8%. And guys, after that, we will give you no more deduction. PGBP shop is closed. Guys, while this is a great section, it's only available to small people who are right. Residents, individual, HUF, partnership firm, not even LLP. And only if your turnover is up to 2 crore. This 2 crore, guys, has been increased to 3 crore. Again, something that you've written, but we've not discussed it. If your cash transaction are low, how low, guys? 5%. Next, guys, the best benefit of 44AD is ARP. You don't need to arrange your accounts. You don't need to go for an audit. And you have to show fixed profits of 6 and 8%. Guys, can I show higher profits? Because higher the profit, higher the tax, but you cannot show lower profits. If you want to show lower profits, you will have to arrange your accounts and get them audited because the government will want to check. Same section 44A, D, A, assume deduction again is for professionals. There also, guys, is for right. Some small changes, turnover up to 50 lakh. There also it's up, but there the percentage is not 6 and 8, it is 15%. If you want to show higher, no problem, but if you want to show lower, then same consequence. And guys, for people who drive trucks on the highway, GTA, we have a separate section called 44AA, always on the expressway. For those people, guys, they don't have to arrange accounts, no audit, but they have to show fixed profit per truck. 7,500 per truck per month. I buy my truck today, 17 November. Will I include November? Yes. November, December, Jan, Feb, March. And if it's a heavy truck or a heavy vehicle, more than how many tons? More than 12 tons. Whatever the exact 12 tons. Then light and medium. If it's more than 12 tons, then per ton, 1,000. Whatever in the exam, they say 14-ton truck. 15-ton truck, 15,000. Are we okay with this, guys? This 44A is only for people whose trucks are maximum 10. I have 12 trucks, but I put to use only 9. You have to see ownership. What do you need to see, guys? While we're discussing all of this, guys, we'll do this PGBP revision in two parts. This is the first part. I just want to discuss depreciation and then we'll end it and we'll go to the other part tomorrow. Guys, depreciation is given on all business assets. Example, all the assets do you see here? Can you take depreciation? Yes. Guys, depreciation is all OP. Ownership and put to use. Active use also. Like fire extinguishers. Can I take depreciation? Because that use is called passive use. Guys, I can't take depreciation on any random rate in tax. In accounts I can, but in tax, are there fixed rates? For building, 10%. For plant and machinery, 58. For furniture, 10. And for intangible assets, 25. In plant and machinery, there is some variety like motor car, 15. Ships, aircraft, anything that is good for the environment, pollution control equipment, 40. Windmill, 40. Life saving medical equipment, and anything that changes fast, books, laptops, etc. 40. You have to buy hard these rates, yes. Guys, if you purchase an asset and put to use for less than 180 days, then the government says only half. This year half, next year full. Now, what is 180 days? Don't calculate in the exam. Any asset put to use after third October. Whatever is exact third, full. But after third, you will only get how much, guys? Half. Because used for less than 180 days. And if you're Gopi proprietor and you become Gopi Pipes Private Limited, that is a company, who will get the depreciation? In that year, based on number of days. While this is depreciation, there are two methods of depreciation, SLM and WDV. SLM is only given as an option to power companies and they don't use it, but WDV is used by everyone else. In WDV, we have an asset called family method. Family is called block of asset. Same type of asset, same rate. All ACs, guys, are they same type? ACs and laptops, same type but not same. So you make a family. We start with the opening balance. So all the ACs opening balance 1 lakh plus purchase. You're adding it. So you add, let's say, two ACs purchase, so 20,000. So 1 lakh 20 minus sale. But when you sell something, guys, is there a profit or a loss? Yes. But in a family method, we don't look at. So 1 lakh plus 20 minus 10. 1 lakh 10 into, if it's ACs, into 15. So that's how you calculate depreciation. Guys, while in SLM, it's very painful because you have to see individual. In SLM, guys, 1 lakh asset now 80,000. Can I sell it for 85? That 5,000 profit is called balancing charge. And if it's a loss, it's called terminal. Guys, in the exam, depreciation is pretty common. And depreciation you have to do as per income tax rules. If you've forgotten depreciation, you should do it. If you've taken the wrong rate, take the right rate. And guys, very lucky few people get additional depreciation in India. Depreciation, which is extra how much percent? 20% only once per asset. Not everyone gets it. Only people who are PM, power and manufacturers. So as a CA firm, can we take additional debt? As an academy, can we take additional debt? No. But can we take debt? Yes. Guys, it's only given for plant and machinery. That means not for building, not for furniture, not for intangible assets. And plant and machinery only except MOS. MOS means on motor vehicles, no additional debt. But debt? Yes. Ships and aircrafts? No. Office appliance? No. and second hand. But 20% second hand, this is very strict, guys. You need to unbox. चलिए खत्म करते हैं. All right. It's already made, and we've covered entire PGBP incomes, deduction, disallowances. Now this one covers some additional points, guys, but they're equally important to PGBP really well. Let's see. 44A covered in that video. 44AB covered in that video. Presumptive tax covered in that video. Now we come to builders. Guys, as a builder, can prestige builder sell a 1 crore property for 70 lakhs? Yeah. But the government says, listen, yeah, no one does such a big bargain. So maybe you've taken which money? Black money. So they always check. They take which number first, guys? Sale consideration, which is how many lakhs example. And they give a margin of 10%, which makes it how many lakhs? If your stamp duty value is up to 77 lakhs, we have no problem. Then whatever is your sale, we will take that. But our stamp duty value is how many crore, guys? One. Then the government says, sorry, we don't believe you. Although you are saying how many lakh? 70, we will take how much? 1 crore. Guys, that is it. If there are two stamp duty values, which stamp duty value can you take? The lower one, but provided, same concept, guys. Some amount of money has been, no, now it's not paid, has been received by modes other than CBC. Everyone okay? Guys, by the way, in PGBP, wherever I mention cash, I mean CBC. Next. I'm in accrual system of accounting, guys. I want to pay my electricity expense, not paid, pay a bill. Can I minus it? Rent payable, can I minus? Because accrual means follow the year. But the government says, listen, there are five expenses. How many? These five expenses, I will give you a deduction only when you pay. Send us a screenshot, tell us you paid, only then we'll get the deduction. Don't worry, you don't need to pay today at 12:49. You can pay tomorrow also, you can pay day after. In fact, you can pay till John. What is John? After the year ends, July, October, or November, depends on whichever is your return filing due date. What are these five expenses called? M3. Any expense you're paying to a MSME, micro, small, medium enterprises. Pay them because they need the money. Any amount you're paying to tax, pay them because the government needs the money. Any amount you're paying to the railways, any amount you're paying to the employees, but BPL, bonus, their provident fund, NPS, gratuity fund, and their leave salary. And last, guys, if you are going to be another Vijay Malia, this time you won't get deduction because if you don't pay what? Interest, you won't get deduction. I'm giving you some examples. I have interest payable. I've converted that into a loan. No. Unless you pay, you won't get deduction. Next. There are two methods of accounting which you can use in PGBP and IFOS, guys. That is accrual system or cash. In accrual, you'll follow the year. In cash, you'll follow cash. First, I'm talking about accrual. You will tell me, will I get this deduction, guys? I have rent for this year 10 lakh. Also paid rent for next year 2 lakh. Yes. Now, how much deduction will I get? I will only get 10 lakh because follow the year. But same adjustment, guys. I am following cash method. I paid 10 lakh for this year, 2 lakh for next year, 12 lakh because follow. Fine. Same with income. I'm earning 1 crore income. Out of that, 10 lakh is receivable. How much will I take? In accrual system, 1 crore. In cash system, 90 lakh because follow the cash. Next. There are three types of businesses. Now you're well versed with these three businesses, guys, because we use them in set of sector. Normal business, also called non-speculative business. Speculative business and specified. Specified business, you just not just know the name, you also know all the businesses because super fast bike can cover three hospitals, three workshops, three institutes. Speculative business are those businesses where you buy and sell without taking delivery. That is called intraday trading. And non-speculative businesses, everything else. Yashas Academy, yes. Non-speculative. Guys, Zomato, Uber, Geo, non-speculative. And if I'm a derivatives trader, then that income will be, yes, derivatives are normal. Repeat, derivatives are, all right, next. Guys, if I have a personal asset which is used for business, example, I have a laptop, which is earlier my personal laptop, now I introduce in business, that's called capitalized. What is it called? Then what value should I take in the balance sheet? The original cost, because the government says when it was a personal asset, you did not take depreciation. So now you can take depreciation on the original cost, which is a good thing for us. Except one asset, building. If I have taken a building as an investment and now I'm introducing into my business, I will have to take notional depreciation. Example, the building was with me for 2 years as an investment. So I'll take depreciation for how many years? And then the balance amount will be in my balance sheet. Next, cost of the asset. Guys, I'm buying a big asset for my factory. What is the cost of the asset? All the cost till the asset is put to use. Example, guys, can I take the original cost? Import duty, transport charge, installation, training, all the cost till the asset is put to use. Let's talk about three important costs. If I don't pay the entire amount, I get a subsidy. Example, the asset is for 10 crore, the government pays 2 crore subsidy. Then will I take depreciation on the 2 crore? No, the government says in your cost you will minus how much? 2 crore. If I paid some import duties, is that my cost? Yes. But if I get a credit, example, I paid import duty of 1 crore. So I will add how much? But if I get a credit of 1 crore back, credit means a cash back, then how much is my cost, guys? And last, guys, if I've taken the asset on a loan and I'm paying interest, even the interest till the date of put to use will be added to the balance sheet. That means it will be capitalized. Next, guys. And cost of asset, guys, if you buy an asset in cash, more than how much? 10,000, that will not be allowed. Example, I buy a new laptop for my firm, 1 lakh rupees, I pay in cash. 70,000 cash, 30,000 check. Yes, 70 will not be allowed, but how much will be allowed, guys? 30. Yes, everyone behind also has to be revising with me. Next is P salary and P interest. Guys, what is P salary? Yes. Partner salary or partner's interest. The guy who's smiling for some reason, yes, someday you'll become a partner, you'll have to know this, guys, yes. Or maybe not. Yes, this decision is yours. Yes, partner salary, guys. The government says there's a limit on how much a partnership firm can pay part and interest also. Let's talk about first interest. Interest maximum. What if the partnership firm pays 14? They can pay, but they'll get a deduction only of example. I'm a partner in a partnership firm. Let's say I've contributed 10 lakh. 10 lakh into 12%. So the firm will get a deduction of maximum 1 lakh. And whatever deduction they get, the same amount will be taxed in my hands under PGBP. Are we okay? Same to same. And for salary, guys, after you minus interest at 12%, depreciation, etc., whatever is the balance is called book profit. What is it called? Higher the book profit, higher the salary you can pay. So that depends on your profit. And that profit is split into up to 3 lakhs, above 3 lakhs, up to 3 lakhs, and above 3 lakhs, 60 lakhs. If that happens to be 5 lakh 42,000, then my maximum is how much, guys? 5 lakh 42. Can I pay 5 lakh 70? Yes, but the deduction will only be 5 lakh 42,000. Next, guys, deemed income. There are how many deemed incomes, guys? 4. A, B, C, D. Guys, A is asset. Any scientific research asset, if I sell, then it will be reverse. Yes, B. Balancing charge. C. Cancellation of any liability, and D. Bad debt recovery. Guys, these four are indirect incomes. Next, list of specified business we already know. And there are some important sections which you go through. Guys, the secret sauce to do PGBP is do it without the sections. Do all the concepts, don't even look at one section. Once you're done with all the concepts, guys, then add the sections, plug in the sections and remove and remember them. Guys, remember, concepts are like the gift. First create it. Then the wrapping you can do later on with the section. Yes. So PGBP is done. 2 videos are being recorded. They're already on the drive. Watch them. And more sums, more sums, more sums. PGBP in question number. All right. And this revision video is specially dedicated to our finance minister, because while having caramel popcorn and salted popcorn and cheese popcorn, she made some really big changes in the Finance Act 2024. So if you're a student of May 25 exams or September 25 exam, this revision video, guys, will be very helpful to tackle a very important chapter which is called capital gains. Let's try and see, guys, how capital gain can be tackled. Whatever you remember, guys, you should participate. We'll also discuss it and plug in sections also as and when we see them. Everyone, capital gain, no book will tell you, but is divided into 3 parts, guys. What is the first part for capital gain? Computation or calculation, where you compute how much is your capital gain. But obviously, guys, you want to have gains, but you don't want to pay tax. So can you exempt it? Yes. And last, guys, there is something called tax. Just like in a restaurant, you have a menu card and you have today's special. In capital gain, you have some special rates. Let's try and see. For computation, guys, we have really important 5 friends. Guys, remember this chapter, while it is very big, this revision video is going to be helpful and it's a practical question in your exam. Yes. 5 people or 5 letters. Can you tell me the letters which you should know when you compute? A, TPSC. Guys, capital gain will only be calculated when there is a asset. Asset includes land, gold, diamond, shares, listed shares, unlisted shares, bonds, debentures, and also personal assets, which is only sad job. Example, if I sell my mobile phone, guys, is this capital gain? No. If I sell my car, no. But if I sell jewelry, yes. Guys, SPL, stock is not capital gain. Personal mobile asset is not capital gain. And land, which one, guys? Rural agriculture land is not capital gain. Next, I should not just hold my asset, I should also sell my asset, guys. I can sell it, exchange it. Guys, can the government buy it? Yes. Can it be extinguishment? And also transfer of asset into stock in trade. We'll see more of that also. Next, P. Period of holding. Guys, can be short term or long term. Guys, which is better? Because if you hold it for long term, the government gives you some exemption under section 54. Also, if you hold long term, guys, the rate is low, 12.5%, which you will see ahead in this video only. So for all assets, what is the period of holding, guys? 2 years. But for listed Zoom, what is listed Zoom? Listed shares, zero coupon bonds and mutual funds, guys, the period is 1 year. And next, guys, selling price. Guys, higher the selling price makes the government happy or lower? Higher. Because higher the selling price, higher is the gain, higher is the tax. So they take your selling price, except in how many cases, guys? 4, which is called what? Buts. And last is C for cost of acquisition, cost of improvement. Guys, there are two costs, cost of acquisition, cost of improvement. And whatever you pay is the cost. I bought a house for 20 lakh, 1 lakh stamp duty. What is my cost? 21. Guys, you always include the stamp duty also when you're buying the property. Guys, what if the asset is bought very old fashioned, 1/4/2001 before that? Then you will take original cost or fair market value, whichever is higher. And only for land and building, there's a ceiling of stamp duty value. Next, guys, what if it's a bonus share? What is the cost? What if it's a right share? What is the cost? Whatever you pay. Guys, what if my grandfather or my father gives me an asset which is not taxed in my hands? Then, guys, cost to the previous owner. And what if my neighbor gives me an asset which is taxed in my hands, guys, and that amount of tax that I have already paid? And guys, in case of intangible assets like patent, brand name, trademark, etc., what is the cost? Always 0, unless I purchase an asset, guys, unless I purchase an asset. Next, let's talk about buts. Guys, government doesn't trust you in how many cases? 4. 1, when you're selling land and building. 1, unlisted shares. When you can't determine, and in slum sale, they always compare your value with which value, guys? Fair market value, and they take whichever is higher. But for land and building, guys, they give you a 10% margin. If your selling price is 75 lakh plus what percent? 82.5 lakh. If the stamp duty value is 85 lakh. So you get a margin of 10%. What if there are 2 stamp duty values? Can you live with 2 stamp duty values? No. You can only live with, which one will you want to take? Lower one will you take? Only if the amount has been paid by modes other than C, B, C. We've done this in IFOS also, PGBP also, and third time under capital gain. Yes. While you compute capital gain, after you know these 5 letters, guys, when you compute, you always start with which consideration? And there are 3 deductions, guys. First is expense on transfer, not expense on purchase, guys. One student asked a question. This is not expense on purchase, expense on transfer. Then the amount is called net sale consideration. From that, cost of acquisition, cost of improvement. Are we okay with this, guys? Yes. Now, in this case, we have not discussed indexation because, guys, a landmark, very, very important date of capital gain now is which date, guys? 23rd July 2024. You might forget your birthday. You might forget any other day, but don't forget this day for your exam. Very important, because on or after this day, the government removed the concept of. As a taxpayer, it's very annoying, guys. As a student, it's very good because no indexation means one calculation less. But let's still discuss what is indexation, guys. Indexation is IC. What is IC? Indexation is only given a cost. Guys, indexation takes your cost and stretches it like a chewing gum. So if your cost is 20 lakh, can it become 60 lakh? Yes. Indexation is only given to which assets? Long term. Only to long term, and that too, guys, except listed, except. While this is the case before 23rd July, after 23rd July, guys, only land and building. They have 2 options, guys. One option is with indexation, one option is without indexation. We'll talk more about that in additional points. Let's go to exemptions. Now guys, you have capital gain, but you don't want to pay tax. Is there a way out? Yes, that's called exemption under section. Guys, I have sold a house and I have a capital gain of 80 lakh rupees. Can I buy another house? That's called section 54. House for? Only thing, the house that you're selling should be which kind of asset? Long term. And that your house that you're buying should be bought within or constructed within 3 years. And till then, can I go to Las Vegas and bet with that money? No. Till that, you have to put the money in a capital gain account. By which date? Tomorrow? By John. So guys, either by John you buy the new asset, or by John you put the money in which account, guys? Capital gain account. Are we clear with this, guys? Yes. The new asset that you're buying, the new house that you're buying, guys, should be kept with you for how many years? If you sell it within 3 years, is the government upset? Yes. If you sell it, they will reduce your costs. Guys, punishment. And next, guys, can I buy 2 houses also? Yes. In India, you can buy 2 houses also, only if your long-term capital gain is up to 2 crore. My long-term capital gain is 3 crore. Who can stop me from buying 2 houses? You can buy 5 houses also, but exemption will only be given for 1 house. Next, guys, is 54B. Same concept, but for which land? Urban agriculture land. Are you selling an urban agriculture land? Did you make a gain of 80 lakh? Please invest an amount in another agriculture land, whether it's urban or rural, doesn't matter. Within how many time, guys? Construct within? No. Again, capital gain account is the same, guys. All concepts are the same, and keep the land for how many years, guys? What if I sell the land within 3 years? The cost will be reduced, and if it's rural agriculture land where there's no cost and all, guys, then you will straight add it to the income. Next, 54F, family wealth. Guys, are you selling your shares or your gold or your diamond or your land? Then please, guys, you can save your capital gain by buying another house. Guys, but here the government has got a little more greedy. 54F says that you need to invest the full amount. What is full amount? If I sold my asset for 10 lakh, but brokerage is 5,000, then 9 lakh 95. Whatever is remaining with you, you need to invest ahead, guys. If you invest the full amount, no problem. But if you invest anything less, proportional. Example, guys, I had to invest 9 lakh 98,000, but I only invested 5 lakh. Then 5 lakh divided by 9 lakh 98,000 into your gain, only that much will be allowed as a deduction. Are we okay with this, guys? Yes. Next, guys, 54D. Did you have Parle-G industry? Yes. Who demanded it? And in that, guys, you need to buy another industrial land and building within how much time, guys? 3 years. Everything else remains the same, guys. And now, guys, next one is 54EC. Easy capital gain. Are you selling a land or a house? You need to buy bonds. Which bonds, guys? Adani bonds, Reliance bonds? No. Government bonds. 2 of them, NHAI, REC. Don't go into details of what these bonds do, but you have to buy these bonds. But the period here is very small, 6 months. That's why there is no capital gain account. And guys, the maximum time you need to hold it, minimum time you need to hold it is 5 years. What if I sell it within 5 years? Then exemption will be reversed. Guys, everyone okay till here? And the maximum amount of exemption under 54EC is how many lakhs, guys? 50 lakh. And thanks to Radhakrishna Damani of DMart, under this also 54 and 54F, now we have a limit of 10 crores. Are we okay? And guys, all this money, guys, do we need to reinvest ahead? Yes. In which country? What if I buy a house in Dubai? No. The exemption will not be given, guys. And guys, the amount has to be invested within a time period of how many years? Or how many years? But if the amount is coming from the government, guys, then 54H says you hold on and you invest the money only when you receive the money from whom? Government. Now tax. Guys, generally all incomes like salary, PGBP, IFOS, house property are taxed at normal rates. Which rates, guys? But guys, capital gain have 2 special rates. First shortcut, N125. That means, guys, if it's short term, example, I bought gold of 30 lakh, selling it for 45 lakh. What is my gain? If this 15 lakh is short term, it will be taxed at what rate? Sir, what is normal? Normal means slab rates. And if it's long term, it will be taxed at 12.5. Guys, my usual rate of tax is 30%. But I will still have to pay only. Is that a good thing? Yes. Guys, this is on or after 23rd July. Before 23rd July, this N125 was what, guys? N20. Everyone okay, guys? NI20. What is I20? Indexation and 20%. Guys, while this is for all other assets, for listed assets, this shortcut changes. Guys, right now it's 1 o'clock. Yes. What is the most ideal time if I want to buy shares? But 2 o'clock, yeah, I'm going to be driving. I don't know if I can buy the shares. Don't worry, then you can buy it at. Why is this weird shortcut like this? Because guys, if it's short-term capital gain, example, Zomato shares you bought for how many lakh? Selling it for how many lakh? This 15 lakh, if it's short-term, will be taxed at what percent? And if it's long-term, it will be taxed only at 12.5. And guys, why I say only? Because guys, otherwise I would pay how much percent tax? But only 12.5. And that too if it's more than how much, guys? Guys, my gain is 1 lakh 20. No tax. 1 lakh 25. 1 lakh 30. So only on 5. That means, guys, everyone in India talks about rebate up to how many lakh? I'm telling you, it's not 5 lakh. Rebate is up to 5 lakh. Plus, the government is giving you a Diwali, New Year, guys, Pongal gift, guys, of 1 lakh 25,000. Yes. Next, and the additional points. Guys, can you forfeit some money? If you forfeit some money today, where will it go? IFOS. But before 2014, guys, if you forfeit some money, example, I did not sell a house and I got 7 lakh rupees, guys. Then what is my original cost? Minus how much have I already got? So what is the balance, guys? So it will be reduced from my cost. Second, guys, AJ cost. Can the government suddenly in the middle of the year change the rule, guys? Yes. People, I'm still in the revision video. Everyone, you will really benefit from this revision video. Watch and pay attention, guys. Yes. In AJ cost, guys, it's only and only when I see a date called 31st Jan 2000. This AJ cost is only given for LLB. What is LLB? Listed shares or securities, long term, and you should have bought before his speech and sold after his speech. Guys, he changed the rate, Arun Jaitley, but he said that I'll give you a new cost, which is 2 steps. Step 1, step 1, whichever is higher, step 2, whichever is. That means what, guys? If I bought some original asset, guys, for 1,000 rupees, I will get that cost or a new cost. New cost is nothing but the fair market value. As on which date? Your birthday? On 31st Jan 2018, or the selling price, whichever is. Guys, fair market value can be lots of values. Highest for shares, and for mutual funds, it is NAV. Guys, the third additional point. In case of a company going under liquidation, Kingfisher Airlines, guys. Do you remember Kingfisher Airlines? Guys, will you beg from a beggar? So Kingfisher Airlines will pay no capital gains, but as a shareholder, can you pay capital gains tax? Guys, remember shares of 10 crores given for a plane of how many crores? So that extra 2 crores is long-term capital gain. But in this case, you will also consider deemed dividend under which section? 222C. Next additional point was slum sale, guys. If you transfer not just one asset but an entire unit, guys, what kind of sale is this? Guys, remember 50BB for Britannia. In that case, you only have to calculate, guys, the net worth. What is it? Net worth is nothing but your assets minus your. We've done a sum also on it, guys. In assets, you have to be careful. All depreciable assets. WDV. What if they have not given WDV? You got it. And guys, all land, etc., which is non-depreciable, original. Whatever I've revalued it. And liabilities, but only of the unit you are selling. That's called which sale, guys? Slum sale. Anything else? That's about it. There are some important sections which I have given you, guys. Watch that. And guys, the capital gain. In fact, I don't even feel you should read any notes. Just watch this video. And after that, guys, back to back, do all the exams from first in the same order that we've done in class. And once you finish all the exam sums, guys, every sum has to be done from 2 perspectives. Old, new. Guys, new is post which date? We forgot one option, guys. One is for land and building. Please, let's do this and let's end the video there, guys. For land and building, how many options do we have? Option A, you don't get what? Indexation. But you are only taxed at what percent, guys? So choose that, guys. And if that number comes to 12,17,500, keep that ready. What is option number B? I-20. Will you get indexation? And you will be taxed at what rate? And what if that is, guys, 12,68,500? Then which one will you choose, guys? Alright. What if this is 10 lakh? What if this is 1 lakh? What if this is a loss of 2 lakh? Then it will be considered as what, guys? You can choose this, but loss cannot be set off or it cannot be carried forward. Guys, I'm telling you in this video also, the one of the most difficult chapters you will feel as a CA Inter student when you're revising, not in class, when you're revising, is capital gain. Hopefully this video will help you understand, revise, and do this again and again, back-to-back revisions. One of the things that people generally think about is I'm earning some interest income, I'm earning some dividend income, I'm earning some house property income. So at what rates will it be taxed at? A lot of people have this query that what amount I will be taxing on. Guys, taxation does not work on your individual income. Yes, we are revising a chapter which is called rates of tax. Yes, everyone. So looking at a chapter called rates of tax and how are we taxed from an exam centric perspective, guys, we are revising this chapter. This chapter is something that is discussed in ICI material chapter number 1. But that time you don't have the capacity. Right now you have the capacity. We finished rates of tax as a chapter. So let's do a very quick revision, guys. Any guesses how long will this revision video take? 5 minutes. Any other guesses? Yes, we'll see how fast we can do this, guys. But guys, rates of tax only works on a concept of total income, guys. Which income do we need? And mainly in your exam, guys, it will be total income and rates of tax of which person, guys, individual. So while we do others also, we'll focus on individual more. Now, guys, individuals not just have Swiggy, they also have Zomato. They not just have Uber, they also have Ola and also have Rapido. So you choose whichever is cheaper. Same way, guys, we have two schemes. One is called the optional scheme. What is it called, guys? People call it the old scheme. We also will refer it to the old scheme. And one is called the new scheme, which is now called the default. Guys, the government wants us to be in the new scheme. They are pushing us towards the new scheme and there are great benefits in the new scheme. That's called default tax scheme under section 115 BAC. Will the examiner tell you which scheme to fall in? Yes. But sometimes they will use word like advise him to reduce his tax liability. Then you will do which scheme? Both, and you will take whichever is cheaper. Now, guys, the rates of tax first let's do for optional scheme, guys. For optional scheme, it depends on your age. If you're below 60 years of age, then what is your basic exemption limit, guys? 2,50,000, that means up to 2,50,000, what is your tax? 0. If it's more than 2,50,000 up to 5 lakh, what is the rate of tax? 5%. If it's more than 5 lakh up to 10 lakh, it is 20%. And if it's more than 10 lakh, then it is 30%. This is the government telling you that if you progress in life, we will progress with you. That's why direct tax is called progressive. Next, guys, if you're someone who's 60 years or more, but below 80 years, then you're called a senior citizen. Only one change, your basic exemption limit now becomes. So there's certain extra income you can earn by paying how much percent tax, guys? 0. Then 3 to 5 is 5, 5 to 10 is 20, and more than 10 is it the same, guys? So only one change here. And guys, if you're 80 years or more, then in that case, guys, 80 years, 60 years means what? What if today is your birthday, 23rd November, and you turn 60? Then this year, will you be considered a senior citizen or not? Yes, full year senior citizen. Are we okay with this? 80 years or more, than up to how many lakh, guys? So you can earn higher income without paying any tax. All grandparents, great grandparents, guys, this is what they pay tax at. Then, guys, up to 5 lakh, nothing. 5 to 10 lakh, straight 20, and more than that, guys, 30%. While all this is for resident, guys, if you're a non-resident, that means you don't spend too much time in India. Do you vote in India? No, we don't give you higher bill. We only give you one basic exemption limit of how much? So in the exam, non-resident 62 years, 2.5, non-resident 82 years. And guys, this is called basic tax. What is it called, guys? Basic tax. Basic tax is basically the first tax you will calculate. Now, the government wanted to please a certain few more people. So they said, listen, if your total income is up to 5 lakh rupees, then we'd like to give you a benefit. That benefit they call as what, guys? Rebate under section 87A. So it's not actually a basic exemption limit. Basic exemption limit is still 2.5. But from 2.5 to 5 lakh, what is the gap? 2.5 lakh into 5%, how much is that? 12,500. They will give you a maximum rebate up to that of 12,500. But your income should be up to, in the exam, 5 lakh 5,000. No rebate. Unfortunately, guys, you should not have taken that 5,000. Yes. Now, guys, this is called BR. What is it called? By BR, it's a shortcut, guys. In basic tax, there is rebate. But non-residents will not get any rebate, guys. Today's election results, they did not vote. If they don't vote, we don't need to please them, guys. Next is a surcharge, guys. This is only in the exam if your total income is more than 50 lakh, more than 1 crore, more than 5. If it is happens to be, then only think of surcharge. Otherwise, don't think of surcharge. It is at what percent? 10, 15, 25, and 37% of not your income of your basic tax. They all look back. Basic tax looks at total income. Surcharge looks at basic tax. And guys, quietly sitting at the bottom very confidently is health and education cess, which can only be used for health or education. And this is a flat rate of what percent, guys? 4%. This is basically something that is useful. This is called the old scheme of tax, guys. Now we move ahead to HUF. Guys, in India, very conveniently, HUF can also been given a basic exemption limit of how many lakhs, guys? So is it the same? Yes. But they don't have what? Higher basic exemption limit. They don't enjoy what?
rebate because they don't vote. Families don't vote, individuals vote. We've already given them a benefit. The surcharge is also the same. The HEC is also the same. And guys, something that you should know, this will not be in your exam. Yes, so good. We will focus on whom, guys? Individual. But we'll cover everything in this revision video, guys. Next is partnership firm or LLP. Guys, they don't get any slabs. They have a flat rate of 30%. They have a surcharge of 12% only if their turnover, total income is more than 1 crore, and a rate of 4%, which looks so good as a student, guys. But as someone who's a part of a partnership firm, actually two partnership firms, is very painful, because if the partnership firm makes 2 lakh rupees also, 30%, 20 lakh also, 30, and 2 crore also, 30%. Next, there is companies. They divided the companies into two parts. One is called Indian company and one is called foreign company. Indian companies are registered in India. Foreign companies are registered not in India, anywhere else. Yes. The tax rate here is 30%. The basic tax is it higher? Yes. But we are told them, guys, that listen, you can also become a Indian company. Which flag you need to put, guys? No. You have to register in India. So just you register in India and you can also become an Indian company. Example, guys, Tesla US can become Tesla India and become an Indian company. Yes. All right. Next, guys, the surcharge is very small. If it's more than 1 crore, surcharge is only 2%, and if it's more than 10 crore, surcharge is at what rate, guys? Sorry, 2 and 5%. This is very low as compared to individuals. We pay a lot, guys. 2 plus 5 is 7%. This is for companies who earn more than how much? 1 crore. And if you are earning more than 10 crore, it is 12%. This is not 71, this is 7%. And guys, both of them have a HEC of how much, guys? 4%. Again, guys, companies is reserved for CA final because, guys, same portion is at CA final but something more. So companies, they will tax at which level, guys? CA final. And next they say that if you're an Indian company and 2 years back, not this year, which year are we in? 24, 25, not this year, which is the last year, not even that year, before that, 22, 23, if your turnover has been up to 400 crores, then guys, that means you're not the biggest company in India. We might tax you at 25%, but you have to check your turnover. How many years back, guys? 2 years back. Your limit is how many crores, guys? 400 crores. That's for companies. While we're studying all of this, I'm telling you guys, secret, guys, it's an individual game at CA Inter. They will ask you on individual, and question number 1 will give you 4 marks to calculate that person's rates of tax. So do this chapter well, revise it well. Next, guys, there's a very small concept of MMR, maximum marginal rate. In TDS, there are 2 sections where they say that if you don't give your PAN, then they will tax you at MMR. Guys, those 2 sections also you know, 192 and 192A. But doesn't matter how MMR is computed. But MMR right now is 42.74% as per the old scheme. Next, guys, is something called MMR round off. Guys, in tax we round off, in real life also we round off. When you fill a petrol of 300 rupees and 30 paise, you never pay the 30 paise, guys. They're complaining about it. Yes, you only pay how much? 300. Same way income tax, guys, they round off, not your basic tax. Guys, they only round off 2 things. First is total income. You see the last digit. If your total income is 10 lakh 16,222.7, then what will you ignore, guys? 7. And 222, you see the last digit. If the last digit is less than 5, it will go to the earlier than 220. And same number, but if the last digit is, let's say, 227, then it will become 230. This is called nearest 10. What is it called, guys? But the point is, whatever it's exactly in the middle, then the government has think like the government. Then it will become, guys, the higher number, 230. That's how the government gets little extra money from all of us. And the same thing, tax round off happens when not at basic tax, not at surcharge, but the total tax is rounded off in the same manner. So pro tip in the exam, when they say calculate total income, the last number should be 0. And when they say tax liability, the last number should be 0. Alright. We move ahead to next things, guys, something called marginal relief, everyone. Guys, marginal relief is a problem only when you're in the border area because of surcharge. Because of what? Example, guys, your income has been 50 lakh 25,000. You are very happy or sad also. You are happy because you earn good amount of income, but you are sad because you have to pay surcharge. So guys, here you will pay basic tax and you will pay surcharge of what percent? 10%, and you are very upset because of 25,000 rupees you are in the now surcharge category. So the government says, listen, don't be upset. Make 2 calculations. First, tell us your extra income. Tell us what? But extra as compared to what? Last surcharge limit. What is the last surcharge limit? 50 lakh, and you are making how much? 50 lakh 25. This is your total income. So how much extra income have you earned? 25. To earn that 25,000, how much extra tax are you paying? Let's say you're paying 1 lakh extra tax. Then guys, what is the difference? That 75,000 they will give you a relief, but after surcharge. After which level, guys? So please tell me, guys, relief is a concept only after surcharge. So you'll calculate surcharge. Now this person, whenever he calculates the surcharge, he will get a relief of how much, and on that final number they will calculate HEC. Yes, do one sum on it. Guys, this has not come in the exam because guys, too much calculation. And they don't have too many marks. How many marks for ET, guys? 35, not even 50. How many marks? So this is not a very important concept, but do one sum on it and you'll be good to go. Otherwise, come on the doubt solving session, ask me the doubt whichever you have. Yes, now we move to something else, guys. Guys, income over the previous year are taxed in which year? Assessment year. Your exam previous year, 24-25. Assessment year. But the government says that, listen, there are some people who might run away to India, to UK, guys. We've seen that happen before. Yes, someone from Bangalore only, you know. Yes. So the government says in some cases, guys, we might tax you in the current year itself, in the previous year itself. Ships eventually leave, avoiding danger. If you're in the shipping business and you're a non-resident, then your ship will go abroad and you will also go. So we'll tax you in which year? Previous year. If you are organizing an event, AOP, BOI, and after the event, guys, we might tax you in the previous year only. If you are leaving India, not for a holiday, but permanently. If you're trying to avoid tax, or if your business is discontinued, we might tax you in this year only, guys. This was asked in the exam paper for 4 marks. Yes, one of the exam papers that you've seen, guys, 4-mark question was on this. Next, guys, everyone. Guys, if you say that your income is very low every year, and then you go and do some very big expense, or you buy a very big asset, or you make a very big investment, guys, then the government is surprised. Example, your income every year is 3 lakh, and you gone and spent on a wedding, guys, 10 crore rupees. How have you done that? So the government will ask you to explain. But if this remains unexplained, what is the word, guys? Unexplained, guys, either an expense or an asset or an investment or even a credit, then the government says, listen, yeah, we are very upset, you're hiding money from us. And then the government introduces a weapon which is called 115 BBE. And this is very dangerous because let's say 10 crore rupees they're investigating. On the entire 10 crore, they'll tax you at what percent? 60%. No slabs, nothing, flat 60%. And a surcharge of 25% and HEC of 4%. Guys, this is called 115 BB, and these incomes are under section called section 69, 69A, etc. But these sections are not important. What is important is 115 BBE. Alright. We now move ahead, which is another thing that we've learned in rates of tax. SOPI, yes, everyone. How can we forget our favorite guy? Scheme of partial integration. Guys, this also, guys, relax, not come in the exam, but we'll still revise it. Guys, in the exam, if they ask you anything about income, don't calculate SOPI. Only if they ask you about what, guys? Tax. Only then you might think about SOPI. But for SOPI, you need to be an individual. Who you need to be, guys? Individual. And second, you need to have 2 incomes. Agriculture income also and taxable income also. Agriculture income more than and taxable income more than basic exemption limit. If this happens, then guys, then SOPI will apply. Example, guys, total income 10 lakh, agriculture income 6 lakh. Will SOPI apply? Yes. How is SOPI calculated? It's a 3-step process, guys. Step 1, step 2, and step 3 is very simple, guys. Step 1 is called shock. Why shocking? Because you're not expected to pay tax on how many lakhs? 6. But in here, they will calculate tax on how much? 16. So which tax? Basic tax also. In surcharge, that also, and HEC also, final tax. And let's say that is 3 lakh rupees. How much is that? 3 lakh. Then they will calm you down. On which incomes you don't want to pay tax? 6 lakh plus your basic exemption limit. Example, let's say 2.5 lakh. So how much is that? 8.5 lakh. Let's say the tax on that is 1 lakh. So then on the net amount, that is how much? 2 lakh you'll have to pay your tax. And this is the tax because of scheme of partial integration. I don't think this is important from the exam perspective because now exam has eyes on old scheme and new scheme, not this one. Yes. Anything else in rates of tax, guys? So we now come to the hero of this story, guys. This is section 115, better available choice. The government says it's good to have a choice in life and choose whichever is cheaper. So they made this choice which has some amazing pros and some cons as well. So let's look at the pros, guys. Surprise, surprise, the slabs have now been changed. So now the slabs here, watch this video for these updated slabs, guys. It is 0 to 3 lakhs. I'll tell you the shortcut first for the slabs, guys. The shortcut is 3, 7. 3 plus 7, 10, then 12 and 50. What this shortcut means is here, guys. 0 to 3 lakh, 3 lakh to 7 lakh, then 7 lakh to 10 lakh, then 10 lakh to 12 lakh, then 12 lakh to 15 lakh, and then more than 15 lakh. But sir, I've written something else in the notes. Yes, if you're one of them who's not written this in the notes, please write them because these are the new updated ones from May onwards. And what is the rate, guys, here? Guys, 0, 5, 10, 15, 20, 30. As you know, and Nirmala Sitaram also knows what's an unlucky number, guys, 25. So we don't use that. Another very good thing is, guys, you can opt into this scheme anytime till you file your return of income, that is John. But for salaried person, they have to tell their masters in advance which scheme they want to be under. Guys, can you switch from old to new scheme? Yes. Unless you're a PGBP person, then you can go into the new scheme only once. When you get out, you cannot go back again. It's like a $1 entry. You can only enter once. Next, guys, here the rebate is up to 7 lakhs. So, guys, up to 7 lakh rupees, they will not charge you any tax. You will calculate the tax, but you will get a rebate under which section? Same, 87A. But if you are one of the unfortunate people who earn 7 lakh 2,000, then don't worry, look at the relief which you have written a note on. So again, extra tax, extra income, that portion you'll get a relief. And guys, here the surcharge is never at 37%. The maximum surcharge are what paid, guys? 25%. Can we have 10%? 15%, 25 is the max. So people with very high income, this scheme is the new scheme and a good scheme for them. And now what are the cons, guys? This is very, very important. Guys, a lot of deductions have been taken away. Go chapter wise, guys. Capital gain. Nothing. Guys, same. IFOS. No change. Same means, sir, what? Same means if capital gain in an old scheme is 5 lakh. Here also 5 lakh. IFO is there 2 lakh. Here also 2 lakh. Excellent, guys. In PGBP, they made some changes, guys. Additional, scientist, specified, awesome, coaxial. Guys, additional depth will you get? No. Depth will you get? Yes. Scientific research outside will you get? No. In-house will you get? Yes. Specified business 100% reduction will you get? No. Awesome area, guys, is not awesome anymore. Do you remember this, guys? So these deductions you can't take. What have we already taken? Added back. Next, guys, which is the next head of income, guys? House property. Guys, in house property, two big changes, guys. One is SOP interest, you can't take it as a deduction. And now, guys, house property room has become non-friendly. Which is the next head, guys? Salaries. Guys, in salaries is a very big change, guys. Blind can still do tours. Only these exemptions will be allowed. Blind persons can take an exemption of 3,200, which you know from salaries chapter. Conveyance allowance, amount spent. Daily allowance, amount spent. Tour and transfer, amount spent. Can you take an exemption? Yes. And 99, guys, very, very important. The news of the hour is standard deduction, which earlier used to be how much? It's still 50,000 in its scheme. You want 75,000, come to the new scheme. So they are encouraging you, pushing you to come to the new scheme because here it is how much, guys? 75,000. Next is which head, guys? Clubbing. In clubbing, guys, minor children's only benefit was how much? 1,500. That also they've removed. Yes. In set off and carry forward, they have a law that house property room is now non-friendly like capital gain. So if you have a loss from house property, then only profit from house property. And very big thing, guys, what they've done is if you cannot take additional debt, then you can't even set it off. You can't even carry forward. Specified business loss. No set off, no carry forward. Yes. And next, guys, deductions under chapter 6A. Guys, remember 80C, 80D, 80DD. It's time to forget all of this. Yes, because here nothing is allowed except Jan. Guys, remember Jan, John. Yes, John and Jan, two shortcuts. Guys, here 80 JJA because we still need jobs. A is Agniveer and N is NPS. Only these three deductions you will get. Otherwise, you will not get any reduction in which scheme, guys, the default scheme. Now, in the exam, watch the wordings carefully. If they say you opted out of the new scheme, old. They say opted into the one new scheme. And if they are silent about it, then you'll have to do both. Guys, my opinion is only the first question might have both. And all other questions, they will either say he's opted out or he'll say he's opted in. Yes, be careful. Don't worry, when we solve computation of income and when we do a revision on that, we'll do how to transition from the old to this new. But I'll just give you a gist, guys. First, you will solve as per old. You'll get the total income and whatever deductions you can't take in the new one, what will you do? Keep adding. Example, old scheme, my income is 10 lakh. In the new scheme, you will start with 10 lakh and 80C deduction 80,000. Add. SOP interest 2 lakh. Add. Whatever is not allowed, you will add and then you will use the new slabs to calculate the new tax and whichever is lower. In real life, we have a software. But till you clear the exam, you are the software. Watch this video, revise, move over and solve some sum. Thank you so much.